people launder money. If somebody has made money from an illegal means and he has 500 million naira, but doesn't know how to account for it, he's happy to leave 50 million in order to wash that money. So he doesn't mind going to import something and sell it for 10% in order to have. So when anybody says, where did you make money from? That's what I'm doing.
Exactly. True.
So the person that you are looking at, that's not what he's doing. Wow. And you assume that business is profitable.
It's a revelation. You see someone doing business, making, he's so wealthy, you be thinking maybe that business is doing.
For many
maybe
of
that
them,
one is just a cover up.
It's just a cover up.
Wow.
For many of them.
And it's true.
For many of them. I mean, you notice, for example, at the point people are opening nightclubs everywhere. Club is a very good business for London. Why? Because people come and pay drinks cash. So if a nightclub goes to the bank tomorrow with 20 million naira cash,
and that's what he sold.
Nobody will question it. So there's some businesses that are very prone to laundering money. So people just see it and assume eateries. A lot of people pay cash. So it's also prone to laundering. A lot of people just hear those things and say, that business must be good. I'm going into it. And they lose a lot of time. If I'm making only 100 million, I'll be stupid to buy a 50 million naira car.
Wow. Seriously?
Because the 50 million naira car, let's say it's a new car. So it will last me 5 years. I'm losing 10 million a year on the value. But that same 50 million naira, I can buy government bonds and make 10 million a year. So that's 20. That same 50 million naira car, I have to insure it comprehensively. That's 2.5 million. And that same 50 million naira car, I've got to maintain it. So the effective cost, real cost is 15 million. Opportunity cost of 10 million, that's 25 million. So I think it would be a bit stupid if I'm making only 100 million and I'm spending so much money on a car that just takes me from point A to point B. And I should just buy a 10 million naira car and then take my 40 million and increase my earnings. So if I increase my earnings by 20 million a year and I compound that money, in 4 or 5 years I should be making 200 million plus. When you are young, what you learn is more important than what you are earning.
What you learn is more important than what you are earning.
A million times.
Wow.
Because what you learn is what you trade with. What you earn, you spend. And in all my years of salary, you discover that the moment they double your salary, you suddenly discover that the tie that you used to buy in Yaba before is no longer befitting your new salary. So you change the type of tie you buy. You change the kind of clothes you. Before you know it, all your expenses increase and catch up with your salary very quickly. So you spend it. But what you learn stays with you forever. There are 1,001 ways to make money. There's only one way to keep money.
Only one way to keep money.
Only one. So every rich person in the whole world that doesn't keep this one way will one day become poor, either in his generation or his children's generation. And that one way to keep money has 3 legs. Any leg that is missing is enough to make you poor. What are those 3 legs?
Welcome to another episode of Selahmeditate, where we discuss on business, mindset, self-development, and topics that are going to transform you, inspire your mindset, change your life, and also help you to do better in your life. Today, I have with me a very special guest, and we're going to be discussing on financial intelligence. With the level of your financial intelligence determines how much money you're going to be able to make, or how you're going to be able to save money, invest money, or do what you need to do with money. Finance is highly important at this point in time. So beside me here is the group CEO of Mediplans Holdings. I remain your host, Benzik, and if it's your first time coming to this channel, we do our best to bring you mind-transforming content like this. So the only thing you could do to show you how you value this content is to give this video a thumbs up, like it, like I said, subscribe to this channel, and also share it with those who this is going to inspire. So guys, make welcome my Chief Group Executive Officer, Mediplans Holdings, Mr. Bunmi Elesho. Sir, it's a pleasure to have you here.
It's a pleasure to be here.
Today I want us to discuss on financial intelligence. Before we go into it, is there something you may like to say or tell the viewers so far based on all the sessions we have been doing so far?
Well, all I can just say is I'm quite excited by the opportunity to impact a number of people. I'm happy to be useful and to be of service to help especially the younger generation.
Okay, so far for yourself, before we get into the topic, what have you been doing for yourself so far? Can you share?
What I've always been doing, running businesses, acquiring, building, growing, dealing with the challenges of operating in this current environment where the exchange rate is constantly depreciating. So it looks as if we're all running against headwinds. So sometimes you appear to have made 5 steps forward, and then by the time the exchange rate comes back, it looks like you have made 7 steps backwards. But very interesting times.
So far, there has been more and more improvement and growth so far.
Absolutely. In local currency, absolutely. Foreign currency, not so much.
Okay, let's get down to the topic of today. Now, to you, how do you describe financial intelligence, and how do you know someone that is financially intelligent?
I'll put it in layman's terms. Your ability to use money wisely to achieve your goals. And I think many people's goals, including building a financial portfolio. When I say financial portfolio, I'm talking about increasing your net worth. So intelligence basically means your ability to use what you have wisely in achieving your goals, including increasing the value of your net worth.
So if you see someone that is not operating in that realm, how do you know?
Unfortunately, most people don't operate in that realm. Most people don't even know how to value their net worth. So most people just look and think in terms of my salary or in terms of my income. But your net worth is more than just your income. Let me put it this way. There's something I encourage everybody to do, which will tell you or give you a picture of where you are financially, which is that list all your assets, value those assets, list all your liabilities, value those liabilities. The difference between all your assets and all your liabilities is your net worth. So that's step one. Now, when you want to know the difference between the poor, middle class, and the rich, when you look at the assets of the poor, you probably won't see any real estate in there. So it's basically going to be largely, home equipment, may have 1 or 2 pieces of land, maybe somewhere in the village or somewhere that's not so valuable, and so on and so forth. When you look at the assets of the middle class, the houses they live in is a significant percentage of their total assets. That's also not a wise balance sheet. But when you look at the assets of the rich, the bulk of the assets that you see that they have are going to be income generating assets. Shares in companies they own, houses that they are renting out, assets that are appreciating in value. The challenge with Nigeria is that all the things we celebrate are depreciating assets. You buy a brand new car today, the moment you remove the rubber, let's say you buy a Jeep for 200 million, the moment you remove the rubber and put a number plate on it, the value of that car becomes 160 million. You have not driven it.
Just by removing that?
Just remove the rubber, put a number plate, is now is 160 million.
That depreciated instantly.
Instantly.
Now, what are the most overlooked aspects of financial intelligence that even seasoned entrepreneurs fail to or often overlook?
What I just mentioned, your net worth. And what percentage of your net worth is actually generating income, and what percentage of your net worth is not generating income. For example, we bought a company some time ago that had about 3 billion in real estate. But out of the 3 billion in real estate, only one of those assets was generating about 30 million in rental income. One asset was not completed. Another asset was lying fallow somewhere. 3 billion in assets that are not generating income. If I monetize those assets, and even if we just buy government bonds at 20%, I generate 600 million a year from the same assets. So having such assets, either in your company's books or in your personal life, that is not generating any reasonable asset income, is very unwise. That's for those who have assets. For those who don't have assets, the biggest mistake we make is not planning our income versus our expenses. So you could be making 100 million a year, but you're spending 105.
100 million a year, spending 105.
You're getting broken more every year. Whereas somebody else is making 50 and spending 40 and increasing by 10 million a year. So it's not just income that matters. Income versus your cost of living. And then whatever you are generating as a surplus, how are you deploying it? So for example, you One of the other mistakes many of us make is you build a very big house in your village.
How is that a mistake?
I use my late father as an example. My late father built the house in our village is on about, I can't remember, 4 acres or 5 acres. Um, there's a there's a there's a fish pond that could take almost 2,000 fishes. There are about 5 or 6 buildings in the property. The main building has about 5 sitting rooms, about 8 bedrooms. If I put that house on the market today, I'm not sure I'll get more than 30 or 40 million naira. Imagine if I had that house on the Korea. What would it be worth?
Billions.
Exactly.
Oh, that's true. Now, I want us to more of tabulate it properly. Now, so I can be clear. You know, there's what they call some financial mistake that people do when it comes to business that they don't know about, and then people those that are not in business personally. Now, what are maybe if you can segment it like into 5 different sessions? What are the 5 different mistakes you see individuals make when it comes to their finances? And then there are also 5 different mistakes that you see business owners make when it comes to their finances in a business.
Okay, so for individuals, I'm assuming they're working for money.
Yes.
So, in their own case, the biggest mistake would now be the fact that, let me put it this way. When you have an income, you need to budget your lifestyle costs.
Okay. Budget your lifestyle cost.
What are the biggest lifestyle costs? Especially for those of us, once you start working and you have a family. The biggest lifestyle costs include rent or cost of house. It includes transportation, or if you own a car. It includes school fees. And then includes, these days, feeding. For many people, they don't have a limit to some of those costs. So, for example, if your rent is more than 20% of your income, that place is above you.
Wow. 20%.
Yeah. Let's say somebody is earning, say, 10 million a year now. You spend 2 million for rent. You have 3 children. How much do you spend for school fees?
School fees alone could take like 50% of the money.
Now, school fees too shouldn't be more than 20 to 25% of your income. Otherwise, you're in trouble.
Seriously?
Oh, yes. You spend 2 million on rent.
Right.
You spend another 2.5 million on school fees. 4.5 is gone. You have transport. So maybe the person owns a car. Maybe so you own a car. What's the value of the car? Let's say you buy a car for, I don't know, 3 million, 4 million. That would be a cheap car though, but let's say you buy a car for 4 million. You depreciate it over 4 years. So every year that car reduces value by 1 million. So that's 1 million. Then you spend how much? These days that fuel is what it is. Maybe you spend another, I don't know, 1 million naira on fuel and maintenance of the car. So that's 2 million. So 2 million gone on your car, 2 million gone on rent, 2.5 million gone on school fees. You haven't put feeding on.
That's true.
You haven't put feeding. So by the time you put feeding, then you now have all the other costs. Telephone bills, NEPA, okay, power bills, all the various generator hair. By the time you add all of that, the 10 million is gone.
Wow.
Now, if at the end of every year, your income doesn't exceed your expense, you have become poorer.
Wow. Okay, that's number 1 for individuals.
For individuals. So not having a budget and having those limits.
Okay.
Number 1. Number 2, not preparing for the day they stop working.
I'm praying for the day they stop working.
You cannot work for someone for 30 years and you now finish and you say that's when you want to start doing business. What business are you going to do? At 60? How? So if you have not planned, and you don't start planning for 60 when you are 55.
The planning is
From 25.
from 25. Wow.
That's issue number 2.
Age number 2.
Issue number 3, not being strategic in terms of your career choices.
Strategic career choices.
I'll explain. I train as a chartered accountant. When we were younger, some of our friends joined some big companies like Shell, which looked as if they had the better choice. Fast track 15, 20 years. When you join a company like a big, very big company, and you are one accountant out of 50, they could just give you one aspect of accounting. Say, deal with salaries and payroll tax. So for the next 5 years, maybe that's what you are doing. You don't broaden your horizon.
That's true.
So you could spend 20 years working in a big company like that. And after 20 years, you come out and you know very little.
You have spent all your life doing just one thing. True.
You are enticed by the monetary reward in the short term.
Okay.
But because you are not strategic, you give up the growth in your skill base and your knowledge base that 20 years from now will be far more valuable than whatever they paid you.
Wow.
So you 20 years after Shell, you come out and you really don't know anything about, unless it has to do with oil and gas, accounting, or some small field, because you are never really the boss. So you don't see the total picture. Whereas someone like me, I've been CFO of all kinds of companies, and I've seen all kinds of balance sheets, all kinds of P&L, all kinds of business problems. I've been in charge of importing items. I've understand logistics, understand treasury functions, all kinds of things. That skill and that versatility is huge when you get your 50s.
Wow.
So most of us were just enticed by big name employer, get some extra money, some earning twice what my friend or my neighbor is earning. But I'm not learning anything. So point number 4, which is similar to point number 3, when you are young, what you learn is more important than what you are earning.
What you learn is more important than what you are earning.
A million times.
Wow.
Because what you learn is what you trade with. What you earn, you spend. You spend. And in all my years of salary, you discover that the moment they double your salary, you suddenly discover that the tie that you used to buy in Yaba before is no longer befitting your new salary. So you change the type of tie you buy. You change the kind of clothes. Before you know it, all your expenses increase and catch up with your salary very quickly. So you spend it. But what you learn stays with you forever. The skills that you keep trading with.
True. Wow. That's point number 4. Okay. Okay, any other one?
Yes, there's a principle called long-term greedy.
Long-term greedy.
So I can use another deferred gratification.
Okay. Delayed gratification.
Delayed gratification. Still, most of us don't learn it early enough. Today now as an entrepreneur, if I have 50 million naira, and I say I want to buy a car, what I think about is not the 50 million I'm using to buy a car. First of all, that car is going to cost me around 25 million every year. Because of that 50 million I'm using to buy it. So, before I do that, I have to ask myself, this extra 25 million that is going to cost me, how much impact does it have on my current earnings? So if I'm making only 100 million, I'll be stupid to buy a 50 million naira car.
Wow. Seriously. Surprised.
Because the 50 million naira car, let's say it's a new car, so it will last me 5 years. So I'm losing 10 million a year on the value. I mean?
Yeah.
For that same 50 million naira, I can buy government bonds and make 10 million a year. So that's 20. That same 50 million naira car, I have to insure it comprehensively. That's 2.5 million. And that same 50 million naira car, I've got to maintain it. So the effective cost, real cost is 15 million. Opportunity cost of 10 million, that's 25 million. So I think it would be a bit stupid if I'm making only 100 million and I'm spending so much money on a car that just takes me from point A to point B.
Wow.
I mean, so just buy a 10 million naira car and then take my 40 million and increase my earnings. Because if I increase my earnings by 20 million a year and I compound that money, in 4 or 5 years, I should be making 200 million plus.
That's true. Long-term greedy. Delayed
Delayed
gratification.
gratification.
That's true.
Sold on to that thing that Nigerians celebrate. That big car, that big house, that 50 million naira worth. Hold on. Build yourself first. Because the people that will be hailing you today, by the way, behind your back, I said, look at him, useless man.
True. The praise in your front, the research behind you.
Exactly. You don't know what he did to be able to afford that kind of car. Yeah.
Okay, that's for individuals. So, when it comes to business people,
I think almost all the things that affect individuals affect business people. But in addition, I noticed in Nigeria especially, a lot of people, you hear Mr. X is making so much money from owning a shop. By the way, they don't even know that he's making so much money. All they see a lot of goods. They've not seen the P&L. So they've also not seen that maybe that man might be laundering that money. They just assume that business will be good. Then they go and enter.
that's P&L.
They don't know what the P&L looks like.
What's P&L?
Oh, the profit and loss account. They don't know what it means. They don't know whether that business is profitable. When people launder money, if somebody has made money from an illegal means, and he has 500 million naira, but doesn't know how to account for it, he's happy to lose 50 million in order to wash that money.
Yes, it's true.
So he doesn't mind going to import something and sell it for 10% loss in order to have. So when anybody says, where did you make money from? That's what I'm doing.
Exactly. True.
So the person that you are looking at, that's what he's doing.
Wow.
And you assume that business is profitable.
Whoa.
Yeah.
Whoa, and this is true. It's a revelation. You see someone doing business, making, he's so wealthy, you be thinking maybe that business is doing.
For many
Maybe
of
that
them,
one is just a cover up.
It's just a cover up.
Wow.
For many of them.
And it's true.
For many of them.
Mm.
I mean, you notice, for example, at a point, people are opening nightclubs everywhere.
Yes.
Nightclub is a very good business for London.
Oh.
Why? Because people come and pay drinks cash.
Eh.
So if a nightclub goes to the bank tomorrow with 20 million naira
And
cash,
that's what he sold.
nobody will question it.
It's true.
So there's some businesses that are very prone to laundering money. So people just see it and assume eateries. A lot of people pay cash.
Oh.
So it's also prone to laundering.
Hmm.
So a lot of people just hear those things and say, that business must be good. I'm going into it. And they lose a lot of money.
And they lose a lot of money. Wow.
So that's one. Two, regardless of whether you see anything or not planning.
Okay.
Not planning. It's a big problem for entrepreneurs. You know, and when you are planning, you must do scenario planning. If this happens, what do I do? If this happens, what do I do? Plan A, plan B, plan C. It is very important. Even have up to plan 7, plan G, sir. Because you need to be able to survive.
Go all the loopholes.
You need to be able to cover all the scenarios. So, for example, as a business person in Nigeria today, if you are importing things, if Naira goes to 2,500 Naira per dollar, what do you do? Will people still buy your goods? Because if you are dealing with imported goods, your problem is not just the ability to buy the next order. Your problem is, can your customers continue to pay for the increases in prices?
And that's true.
That's the bigger problem.
Yes, that's the bigger problem.
Yeah.
Not whether you can buy, whether customers can be able
whether
to pay.
customers can keep
By paying.
Yes. And especially in Nigeria today, where the nature of what has happened, the power cost has taken a lot from people's income. Fuel costs has taken a lot. You can't navigate that too much.
Yes.
So what it means is that if your income is fixed, the amount that is left after you've dealt with all these fixed has become very small. That's why if you notice many eateries that cater for middle class, these days, if you enter many of them, they are empty.
True.
Because people don't have that extra income
to go to them
for those
again.
luxuries anymore.
It's true.
Because those power costs, fuel costs has eaten up almost everything. So when you are dealing with those kind of with any product that has the imported element, it's not just bringing the products in that matters, but can your customers continue to buy? You know, let me give you an example. There's a particular hotel, I'll mention his name. I looked at their profitability now. They're far more profitable than they were before. But the occupancy rate has dropped. Why? Because they're currently charging 200,000-300,000 naira per night. So most Nigerian businesses and customers are not using them anymore. However, they're still very profitable. You know why?
Why?
300,000 naira is less than $200.
Yeah.
It's about $160, $170.
Yes.
That hotel in a place like London or New York will command $300-400 easily. So the expatriates that are coming in see that price as being ridiculously cheap.
And it's true. It's true.
So they're still making a lot of money with less patronage. Because they still have a large clientele that comes in from outside the country.
True.
So you need to understand the dynamics of every business.
So that's why planning is very important.
Exactly.
There are some businesses, like as an entrepreneur now, if you're trying to set up your business, on what based on the financial intelligence aspect, what do you pay attention to for you to take note of before you start starting up your business or for you before you can start making your business go out there?
So when it comes to startups,
Mm.
my first advice to everybody is the smaller the amount of capital you need to start, the better for you.
The smaller the amount of capital, the better. Okay.
The reason being, when you are a startup, by nature, your options to raise capital are very limited.
Mm.
No track record. You don't have much money yourself.
Mm.
How do you want to raise, say, $1 million? Now look at my own example. When I started, what I asked myself was, look, I don't have any capital, but I have some skills. So why don't I start by selling those skills?
Mm.
Be a broker. So I only need a table, I only need a phone. So I was selling my financial skills to start. That wasn't what I wanted to do. So, but that's where I started.
Mm.
Because that was the easiest thing I could start.
Mm.
When you're trying to start and you're asking so many people to bring so much money and place a bet on you with zero experience, that's a tall order. So step one is make the capital that you need to start. Even if you have to make a detour, make it as predictable as possible. Step one. Step two, which is almost contrary to step one, dream very big.
Dream very big.
Dream very big. Why? If you don't dream very big, you will never put all your energy into that small startup.
Okay.
Because you have to know how much is in there. But if you dream very big, you know that that is what you are pursuing. That startup is just a stepping stone. Where you are going is big. So you have to take it serious.
That's true.
Step three. After dreaming very big, drop a plan. For example, if I were a 25-year-old today and I wanted to start business, I can start with something as basic as what they call this thing that gets fever. With money that they trade. No, not Bitcoin. Not Forex.
Okay.
No, when you POS.
Okay.
POS. I can start with POS. I look for a good location where I can be trading. Maybe I start with 100,000 every day. And then try and build my volume. I'll start with them. I can start from there. But in 1 year, I will have stopped that business. Because as I start, I'll be looking for what's the next business that can generate 10 times that amount. I'm only one. It's going to be difficult for me to have 50 POS agents. They will just be stealing your money. And they will use your money.
Do their own.
So that cannot work. So, but that POS agency can only get me thus far. It can't get me too far. So it can only help me start. So as I start that, I must be thinking of the next level to move on to. And the next level, and the next level, until I get to where I'm going. There's a fund I want to do, but it cost me $300 million to start. But I started in my sitting room. So I started there, and I'm building until I set up the fund.
Awesome. Now, when you talked about earlier on that people don't usually know their net worth, one of the mistakes they do. So now for someone that said, I don't even know my net worth, what do I start need to do? Now, as an individual, maybe as an employee, what do I need to do for me to know my net worth? And as a business person, what and what do you calculate to know that this is your total net worth?
You can calculate your net worth in less than 1 hour for most people.
Okay.
You just list all your assets.
Assets.
Your TV, all your assets. List all your assets and value them.
Okay, TV is an asset because
You can sell it.
What are what you call assets? TV.
Anything that you can sell,
Okay, anything that you can sell.
that you have,
That
is
you
an
can
asset.
Okay.
And then the value you put to it is the value that the market will buy it. So if you bought a TV for 1 million, but the black market or the second-hand price is 400,000, that TV is not 1 million, it's 400,000.
Okay.
If you bought a car for 10 million and the resale value is 3 million, that car is not 10 million, it's 3 million.
Okay.
So you list all of that, add it up. Then if you have any liabilities, you list it up, add it up. If you have money in pension or any other thing, you add it as part of your asset. Money in the bank, you add it. If you have any shares, you add it. If your father gave you a house in your village, whatever the value is, you add it.
Those are your net worth.
That's so when you finish adding it, then all what you are owing money points. You have this whatever you have, this friend borrowed 100,000. You add all of them. You deduct your liability from your asset. You have your net worth.
Wow, as simple as that. That's your net worth.
That's your net worth. Complete. Now, if you now want to be smart, you now look at all your assets and ask yourself, which one of this one is making money for me? Poor people, all their assets, very little money is being made from it.
No one.
The only money they're making is in one day.
But I thought some people mentioned the fact that you can use your intellectual capacity is also an asset. So how do you
You can't value an intellectual capacity. You can only value it by the amount of money it's generating.
Okay, that's for an individual. What for business person? What do you, is it the same process to those are the things you calculate?
Same process, yes.
You don't calculate the number of customers you have. You call those ones an asset.
Those ones, can you sell it? You see, in America, for example, you might be able to sell your customer base because there could be a market for it. In Nigeria, I'm not sure anybody will buy your customer.
Why is it possible there and not possible here?
The markets are more sophisticated.
Okay, how do you mean?
Sophisticated. So, for example, when you look at the internet or IT companies, many IT companies, even before they start making profits, have a high value. Why? Because they have a large customer base. So the ability to milk or make money from those customers is valuable.
Okay.
Now, another big difference between America and Nigeria in terms of number of customers is that when you have 1 million customers that are earning $30,000 a year, it's different from having 1 million customers earning 3 million naira a year. Why? Because what you can sell to 1 million people that earn $30,000 a year is far more valuable than what you can sell to 1 million people earning 3 million naira a year.
True.
So that's another major difference in the value of your customer.
Wow. Now, so when it comes to business, you said for the net worth part of it, you cannot really calculate the number of customers you have. It has to be based on all what you have that is an asset. And then you also deduct what you are owing people. With all of that, you can use it. So that's basically how they calculate the net worth of people.
However, in some businesses that have licenses, your license can be valuable.
Okay.
For example, if you have an oil block, that piece of paper alone is valuable. If you're a telecom license, I mean, MTN and Co. paid $285 million for just that license. It's valuable. A banking license is valuable. So those kind of things are valuable and they can be valued. But just having a large list of customers depends, not necessarily valuable.
Okay. Because where I ask for it is that question just kicked off my head, but I will still come back to it. But let me ask. Someone was asking that because of this, and if he wants to sell his business, how do you value the full business for you to be able to sell it to someone, and then know that if you are not being cheated or you are not underselling yourself or putting or what's the word, giving it overpriced,
You're not overvaluing.
Overvaluing it.
There are many methods of valuing businesses. Many. However, for someone that has bought and sold a few businesses, the value of your business is simply the price at which a willing buyer and a willing seller can shake hands.
That's actually the value.
That's the value.
So it means that whatever price you call, if someone is willing to pay, it means that's the value. If nobody is willing to pay at that price, it means it's not the value. Wow. But there are metrics. You may why it's important for you to understand that.
Let me also further explain that point. Okay. It's a very important point. It therefore means that if you are selling, you are better off selling when you are not desperate.
When you're not desperate, true.
Otherwise, you will never get a good value. Same thing if you are buying, you are better off when you are not desperate for that business.
Okay.
Otherwise, the tendency that you will overpay is high. So the rule number one of negotiation, don't be desperate when you are negotiating. It's never in your interest. So that's principle number one. Because at the end of the day, I'll give you an example. We were negotiating yesterday with some people that wanted to provide a service. Their initial asking price was 75 million.
75 million
for their service. I said to them, you know what, you can't pay more than 30. So they came out and said, okay, we should pay 60. I said no. To cut a long story short, they accepted it. Why? Because they're in a more desperate position than we were on that negotiation. If we were more desperate, we would have been forced to pay 75.
Wow.
So anything you are negotiating for in life, if you are more desperate than the other party, you are likely to end up with a poor deal.
How do you now not show, let's say you even wanted that, how do you now not show your desperation?
Well, some people say when you are negotiating, you have to keep a poker face. You know what a poker face is? People who play poker, their face is very straight. So whether they have a good hand or a bad hand,
You don't know.
you don't know. When you are negotiating for something, you have to be strategic. And human beings, we are opportunistic by nature. So once anybody learns or can perceive your desperation, they'll take advantage. It's not being wicked. It's just
business.
Exactly. They'll take advantage. And you know, it's like sharks. You know, when we see once one shark is wounded, that shark is dead.
Because why is important, why I ask on that is that because the person may say, okay, I actually want to sell the business, but I do not even know the value to place on the business for me to even be able to say, okay, this is what I want to sell it.
So now we can go to the technical aspect of valuation. So in the technical aspect of valuation, there are very many ways. The simplest is what is the book value of the business,
Okay, book
which is
value.
what are the total assets less liabilities. That's the book value of the business.
Not the income.
So that's number one. That's the simplest way. More sophisticated ways, you now have, for example, what is the PE ratio you are going to use? PE means price earnings ratio. So you can say, if the company is making 10 million naira a year, you can say, okay, I'll do a PE of 10. So I'll do 10 times 10 million, 100 million.
Okay.
So that's PE ratio.
Mm.
But what ratio you use is also subject to all kinds of negotiations and market forces.
Mm.
You can also use what you call EBITDA ratio. EBITDA is EBITDA.
EBITDA.
EBITDA, which is earnings before interest, taxes, depreciation, and amortization.
Mm.
So there are many technical ways, but the simplest and most basic way is the book value.
Mm.
But the market forces way is just simply a willing buyer and a willing seller. Let me also say another very important point about willing buyer and willing seller. Let's use a car, for example. And let's use 3 people that want to buy a car. Same car. Let's use a basic car that is common, Toyota Corolla. Okay. Mr. A just needs that car to go to the office and come back. So the opportunity cost of buying that car is the cost of Uber. So maybe that person spends 3,000 naira a day on Uber. That's what he's trying to remove. The other, Mr. B, has an Uber contract and wants to use that car for Uber. And from that contract, we make 100,000 every week from that car. Mr. C has a special contract. There are some international agencies that are coming to Nigeria for a 6-month project. And they want a car and a driver for 6 months. And they will pay $50 per day for that person for 6 months. Among these 3 people, who do you think will buy the car at the highest price?
This last person.
Exactly. Same car. But the difference in valuation has nothing to do with the car, but what they want to do with the car.
Oh, that's true. That's true. That's true. It makes it very clear. Now, I used to be very confused myself with that EBITDA. Can you explain it in the simplest term for me to get it?
Okay. Now, so let me start with a caveat. EBITDA is a terminology that investment bankers, private equity practitioners, and financial people use to sometimes confuse laymen.
Because sometimes I will get confused a bit. You'll say, what's your EBITDA? I'll say, EBITDA, okay. I'll Google it.
So sometimes a company might be making losses, but the EBITDA might be positive. So the investment bankers will say, it's the cash flow we're interested in. And the cash flow is EBITDA, which is profit before interest. So if a company, for example, now, let me give you a very good example. Nestle, Nigeria. I think this year to date, they've lost almost 300 billion.
Wow.
Because foreign exchange loss. Last year, they lost over 250 billion because foreign exchange loss. So when you look at Nestle from that perspective, it's as if it's a very bad company. But when you look at the EBITDA of Nestle, you will remove the foreign exchange loss. Earnings before interest, tax, depreciation, amortization. So when you remove the exchange loss, you see that it's profitable.
Okay.
So on an operational level,
Mm.
the company is making money. But because of this foreign exchange liability, which means that if you can find a way of removing this foreign exchange liability, it's a fantastic company. So sometimes you use EBITDA to correct some of those anomalies.
Okay.
Where a bad company might actually be good, but for one or two things, that once you can fix those things, it translates into a wonderful company.
Okay.
Interest rate too affects EBITDA. Because whatever interest you are incurring on debt is added back, so that you want to see the company on its own without all these burdens. How much is it making? That's what EBITDA is supposed to do.
Okay.
Before government takes tax, before you take depreciation, before you take interest on borrowing, before you take amortization, the company itself, when it sells, does it make more than the cost of those sales? And the answer is given by EBITDA.
Okay, so that means EBITDA is simply, in a simple term,
Trying to calculate cash flow.
Okay, that is what EBITDA simply means. Just calculate how much is the company making
Cash flow.
via in money, in monetary terms, versus how much is spending.
Cash flow.
Only cash flow.
Yes, because it also includes your salary cost, maintenance cost, all those things. It's also there. So EBITDA is supposed to basically calculate cash flow.
Okay, okay. Now coming to somebody talking about I have an investor who wants to invest in my business. How do I know the right margin for me to know the right value I'm giving to that investor on the business?
You know, like I said at the beginning, at the end of the day, it is willing buyer, willing seller. Now, what the investor is trying to do, okay, let me give you an example. If I own a taxi company and I want to buy another taxi company, I can pay more for that other taxi company than somebody that doesn't own any other taxi company. Why? If that taxi company is in the same town with me, I can use the same depot. So where I park my cars, I can park all of them in the same place. So wherever they are using currently, I can remove that cost. Whoever is the fleet manager, I don't have to keep two fleet managers. I already have my own fleet manager. So I don't need that person. So there are many costs that that company is incurring that if I buy that company, I can reduce those costs by collapsing it into my existing taxi company. But somebody that is buying a fresh taxi company cannot collapse those costs.
Okay.
So as a result, I can bid higher than that person and still make a lot more money because I already have a platform. So for every investor, the first thing you need to ask yourself is, what is the person really after?
Okay.
For example, we bought a company that for some people, it was hot. This is a problem. Let's throw it away. For us, we saw a potential. So it depends on what each person is trying to do with it. So the real question would now be, what is the investor interested in your company? And what are you interested in from the investor? And that's what basically determines. If it's just money, then the value will be lower for both parties.
Okay.
If, for example, all an investor does for you is just give you money and doesn't give you, for example, another investor can come and say, I'll give you money, I'll give you a place to use, and I'll also give you 1,000 contacts.
True, yeah.
That's more valuable to you.
Yeah.
Whereas, if an investor wants to invest in you and also needs your services, so, and he's not just investing, but he's also using your services, and that gives him to more value because he's not just putting money and expecting dividend, he's also benefiting from the use of the service. So Those are the things that determines which deal is profitable to either the seller or to the investor, and what each party brings to the table.
At what point do you know you need an investor for your business?
Whenever you need money to grow, you need an investor. The question now is an investor the best option? Let me explain further. Debt is more risky, but cheaper than equity.
Yeah. True. Equity is for life.
Exactly. That's number one. Number two, I was explaining to we just hired a very senior fella in one of our companies. And I was explaining to him that management and executives think that equity is cheap, but equity is more expensive than debt. So he said, how? I said, fantastic. When in some of the business we are in, we're in regulated environments. So there are minimum capital requirements for those environments. So one of them requires a few billion. So I said, look, if I go to someone now and say, I need you to invest 2 billion naira in our business. If I'm going to give him less than 30% return, that person will be stupid to invest.
Seriously?
Will be very stupid.
Why?
Good question. Nigerian government bonds is 20% return. So with his 2 billion, he buys the Nigerian government bonds. He's making 400 million a year. And doesn't need to lift one finger. If you invest in my own business, you better lift more than one finger. There's no guarantee you make 400 million. Not only that, the 2 billion can disappear.
That is true.
So, if he's a smart person, if I'm not giving him more than government is giving him for free, what should he do? What's the reward for the risk he's taking? Worse still, inflation is 31%. So even if I give him 600 million naira a year, his money is less valuable next year than it is now, even with the 600 million. It's actually cheaper for him to take that 2 billion naira, go and buy $1 million and invest in Nigerian government bonds and earn 8%. At least he knows that he has $80,000. That the value has remained static. So even if naira becomes 10,000, his money is in dollars.
Wow, this is awesome. Now earlier on you're talking about the fact you talked about the delayed gratification, and you talked about when you're making 100 million, you should not go and buy 50 million naira car. At what point do I know I'm ready to buy a car?
Each person needs to define your long-term trajectory. Now, so let's take different people. If you are working as an employee, my advice is your first priority before you think of buying a car should be, what are you going to do when you stop working? What's that plan? Whatever that plan is. So it's only when you've sorted out that plan and you know what that plan requires that you should consider something like owning a car.
Why should that be the reason? What you should consider before owning a car?
Because life is not just static. You're going to live life for a very long period. So every decision you're taking now is going to affect your future. So that car you're buying now, there's an alternative use of that money that could be more beneficial to that future you're trying to create. So that's why my first response will be, what future are you trying to create? What does that future require? It's only after you've answered that and made adequate provision for that that something like a car should come onto the horizon. Why? There's an alternative to owning a car. This is public transport. So it's not something that without it you can't live or survive. No, there's an alternative. So you must always choose the cheaper alternative until your key goals are accomplished or until your key goals are put as priority. So you know that, okay, this is what I need to do. I've done it. Then I can have some plus to buy a car.
Okay. Okay, that's true. Because I see that what I asked is that there's someone that I know that said based on the kind of job the person does, that he needs a car for perception purpose. So, and with that car, when you appear at that place, you can be able to get that contract or get that thing you want to do. Imagine that maybe you are bidding for a contract of 1 billion, and then you enter Uber or you enter public transport and drop and you want to get 1 billion. They will look at you and unserious someone, even though you can handle that particular contract. So isn't it fair for you to go get a car just for that perception, for that face front? Because I know that someone, they talked about the fact that the person actually got the car just because for that face front, and it's helping him for money and the things he's generating and things like that. So do you go get a car just because of for face value, for the things you want to do, or just for other reasons?
You know, it's the Nigerian mindset that has all those things or appearance. Let me share this story with you. One of my friends relocated to Netherlands about 20 plus years ago. And when he got there, he was talking to somebody, and the person said, "Oh, by the way, once you've done all this, I think you should go and buy yourself a bicycle."
Bicycle.
And my friend felt so insulted.
Hmm.
Bicycle. Do you know that every family in Netherlands owns bicycles? About at least 2 or 3. The Prime Minister sometimes he rides bicycle to work. They have bicycle parks. 3, 4, 5 layers. Bicycles. Why? Because bicycle is the most efficient way of moving around. So their mindset is more about functionality than perception. So coming to Nigeria, for example, even if you want to go for a big contract and need a big car, go rent one. There are places where you can rent cars. So if it's just for those appearances you need the car, you better go rent a car. Because that your big car that's costing you 50 million naira, but you are losing 25 million every year. You need to ask yourself, because if you are renting a car even for 250,000 naira per day, the question is, how many days in a year do you really need to rent that car?
Okay. Even if what if it's as a business person? If the same applies to him as an entrepreneur. You have a company, you have a business, and maybe you just want to have your own car for yourself.
You want to have it versus you need it are not the same thing.
Okay.
So if you don't need it, then why do you want to incur that cost? Now, for me personally, I have benchmarks. There's a certain percentage of my net worth must not go to assets that are not making money for me. At least 95% of my net worth must be in income generating assets. A certain percentage of my income cannot be spent on wasting assets. No. It's a question of discipline.
That's true. Now, coming to house, do you subscribe to buy or rent?
It still goes back to network. So, if I'm a businessman and my net worth is 200 million naira, why am I wasting time buying anything?
You should be paying rent.
Absolutely. Because any house I'm going to buy might take 20% of my net worth.
Yes. But at least you have become a landlord.
Hold on. So let's assume my business is making 40% return. So on 200 million, I make 80 million. If I take 40 million out of 200 million, my income reduces to 64. But that's not where the problem is. So in 5 years' time, that 64 that is returning, that's about 30% compound annual. 30% compound annual in 5 years will give you around maybe 3 times. So I'll probably worth about 600 in 5 years. But 40% in 5 years, I'll be worth about 1.1 billion. What's the difference? I took 40 million in year 0 to buy a house. That's the difference. So in wealth creation, you need to be very mindful of what you call your compound annual income growth. It's a big measure.
There is this issue when it comes to savings and investment. Now, what you mentioned government bonds and all those kind of things. If someone is talking about investing his money or making investment just to see that money is coming for him, what are the investment options you have?
I don't like to give options. Why? Because everybody's situation is unique. I'll explain why. What time frame do you have?
Okay.
Time frame defines what kind of investment you should be looking at. What risk appetite do you have? What age are you at?
Okay.
What other assets do you have? For example, if somebody is at 60 and has just collected pension money, I'll just tell him, go and invest in the safest thing, because you can't restart life at 60. At 20, you can take more risks. So there's so many things that everybody needs to consider before choosing the right path in terms of investment portfolio. What I would say to everybody is invest in yourself first.
Okay.
Invest in learning. Invest in learning. Acquire the right information that is appropriate for yourself, for your age, for your industry, for your career, for whatever plans you have for your future.
What if you want to give a guide? Say, okay, if you are at this particular age range, these are maybe the right investments.
So let's even take it in another dimension. If I already have a house that my father gave me, I'm different from somebody who doesn't even have. So the kind of investment I'll advise somebody who already has an inheritance is going to be different from the person who doesn't have. So those are some of the fundamentals. Now, I would have said invest in shares for long term, but most people too don't know enough about the shares they are investing in. For example, I'll name the bank. I was having a conversation with a friend of mine today, and I said, one of the big banks that is worth maybe around 2 trillion naira. I said, you know that the value of their UK subsidiary is 70% of that 2 trillion. In other words, if you take that UK subsidiary out, what the market is valuing that bank at, the Nigeria bank, the banks, the other subsidiaries they have in other parts of Africa, is 30% of what is on the stock market. In other words, the shares of those banks is very cheap.
Hmm.
But because I am financially savvy, I can understand and dimension what each share is worth. I'm not driven by name. So I can't advise somebody younger to take that step if the person doesn't have that savviness to be able to investigate and look through each person's balance sheet. Warren Buffett's company just announced their third quarter results today. I was just reading it before we started this interview, and I was going through his balance sheet, going through his earnings. So I can read a lot of things and I can see a lot of things, but I can't advise somebody who doesn't have that same level of financial savviness to do the same thing. Because if things change, how does he know?
True.
That same bank tomorrow may not be worth the same thing. So that's why my first advice to everybody: invest in yourself. Learn so that you can make better decisions and better choices. The world is constantly changing. So what was profitable yesterday may not be tomorrow. So you have to keep updating.
That's true. Now, how do you describe good debt versus bad debt?
Oh, very simple. Any debt that is used to make more income than the cost of that debt is good.
More income than the cost of the debt is good. Okay.
Any debt that is not used to make more income than the cost of that debt is bad.
A practical example.
Practical.
Yes.
This phone. If I'm a phone trader and I don't have enough capital to import the phone from China, but there's a trader that brings it in and sells wholesale. So if on the average I can buy the phone for 300,000 and sell for 350,000, and I can sell whatever I buy in 2 weeks. So if I borrow 3 million naira to go and buy this phone, I buy 10 pieces, and I sell those 10 pieces in 2 weeks for 3.5 million naira. That's a good debt. Because even if I pay interest of 100,000 on that loan for 2 weeks, I've made 400,000.
That's true. That's true.
But if I borrow 3 million naira to go and buy a car, because I want to show my friends that I have a car, and it's costing me 100,000 in interest, and that car is not generating any money for me, that's a very bad debt.
That's true. Now, when people talk about banks, they said that saving, the bank has a way of taking advantage of people when it comes to saving than those that are actually coming in to borrow from the bank. How do you describe the system of the banking?
The Nigerian problem is not the banks that is the problem.
Okay.
It's inflation.
Inflation.
When inflation is 30%, when you save money at 6%, you are losing money at 24%.
Okay. Does this?
But if I were in America, where inflation is 2%, if the bank pays me 3%, I've made money. Even though it's just 1%, but I've made money. So the problem is not the bank, but inflation.
Inflation keeps eating the money.
Correct.
The more, even if the money is going up, inflation eats it up.
Correct.
Now there's terminology I usually hear when, especially in the Western world, that you hear like their credit card, their 401k. We don't have something like that similar here. Can you
do.
Okay, can you break it down and its advantage or disadvantage of
the equivalent of 401k is a pension.
Okay.
So 401k is just simply a pension system. Credit cards, we used to have credit cards EcoBank did credit cards about 20 years ago. They lost so much money, so they stopped.
Why? Where's someone that doing it every day? Why did they stop it?
Now it's easier to do credit cards now because of credit bureau.
Okay.
As at the time EcoBank did credit cards, we didn't have very functional credit bureaus. So today, if a bank decides to do credit cards, it can work because we have credit bureaus. Today, now, if you want to borrow money from any of those apps or any of those whatever, the first thing they do is they just go and check your credit bureau. If you're there and your name is bad on the credit bureau, they won't give you the money. Yeah. So, in the US and the developed countries, their credit bureau system works perfectly. In America, they call it your credit score. And so, if it's good, you get the credit. If it's not good, you don't get. And until you fix those issues, no bank will touch you. So today, if you have a bad credit in any of the credit bureaus, no bank will give you money. You have to go and fix it.
Oh, wow. But for here, people can borrow money and vanish.
If you borrow money and relocate, yes, you can do that. If the people that you are owing, if the amount is not substantially enough for them to want to pursue you. If it's substantially enough for them to want to pursue you, they can't pursue you. Because all they need to do is just simply go to the embassy of the country where you went to and go and report you. If they have your details, they report you. And that could cause you serious problems.
It's true. Now, as an entrepreneur, what should be the most important financial metric that you should pay attention to in your business?
Number one is cash flow. Number two, profit. Number one is cash flow. Number two is profit. Number three, shareholder funds.
Okay. Now this is quite deep. I remember there's a question we were discussing the other time, and then you brought it up somehow. So I said, let me bring it up in this topic. What do you think are the enemies of vision?
Vision?
Yes.
I think I've asked this question before.
No?
Okay, there's potential you used at that.
Yeah, it was potential I used that.
Enemies of vision.
There are actually questions you wrote out that period and sent to me. And you told me when we are doing our next interview, I can bring it up.
Oh, really?
Yeah.
Enemies of vision. I think I'll start with that the same response I give with potential. But I'll put it in a different way. Number one, not having a clarity on your purpose.
Not having a clarity on your purpose.
What do you want to really do with your life? Where do you really want to go with your life? The biggest problem I find with most people, which is number two, we're too caught up in the present. We never think of tomorrow. For young people, we're too busy enjoying today. We don't think about tomorrow. And unfortunately for us, tomorrow is created by what we do today. If you are too busy enjoying today, that you don't deliberately and intentionally plan for tomorrow, you will never like what you see tomorrow. You will never like it. So, first one is not having a clarity on purpose. A third one is also also not understanding your own personal identity.
Personal identity.
Who are you? What are your strengths? What are your weaknesses? What are the opportunities that are available to you? What are the challenges that you are facing? Who are you? What will excite you? What will you do that you will thrive? You see, every human being has things that they will thrive in. Everyone. The difference between those who become very successful and those who do not is that the successful identify the things they're good at and develop them. Those who do not never really identify, or they identify but they don't really develop what they are good at. They're too busy trying to be like the Joneses. So for me, for example, the profession I chose and the things I do are things I enjoy doing. And I'm good at it. Like I've told you about this Japanese principle, where you're supposed to find what you're good at. You're supposed to find what you like doing. You're supposed to find what people will pay for. And when you find all those things, you're likely to become more successful. It's called Ikigai. Ikigai. So, not trying to develop or identify or find that thing is a problem. I've never been very good with languages, but I've always been very good with numbers. So, I thrive in anything that requires numbers. And I enjoy it. I can sit down on my head and I'm just calculating numbers. I'm just playing puzzle with numbers. I enjoy it. So any work that requires me to put all of that to use, I will do it well and I will enjoy doing it. It's like football. Those that are very good at playing football and love playing football, when they are playing competitive football, they're enjoying it.
Yes.
So it's not hard work. They're just enjoying the game.
True.
But if you're not good at it, it's hard work. So I discovered one thing at some point in my career, that hard work is only required when you're not passionate about what you do. When you're passionate about what you do, you can work till 2 a.m. and you'll be tired because you're enjoying it. That's where each person needs to find that spot in your life and build a vision that will take advantage of that thing.
That's true. Now, is it possible for someone to be making money in business but still running at loss?
How? You are making cash flow.
Yes.
But the business is losing money.
Yes.
Absolutely. Banks do that a lot.
Oh,
yes.
How? Because I've heard that before. Someone will say they are making money, but they are still losing cash flow. So I'm confused. How can you be making money and still be run at loss?
Because banks trade with money. So long as the money coming in is more than the money going out, a bank will continue to succeed, will continue to operate. But other companies that don't trade in money cannot do what banks do, because the losses you are making is reducing the cash that is available to you. So someday you run out of cash if you are not a bank or a financial institution. But financial institutions can run for many years losing money and still liquid, because it's like a Ponzi. A Ponzi is a loss system. But so long as more people are giving in money, that Ponzi will run. It's only when people that are drawing are more than people giving in that they now start having problems. So financial institutions can run for a long time with losses. Other institutions cannot. Unless customers pay upfront. That's part of what, that's another issue with internet companies. So when customers pay upfront before you supply, you can be collecting money for a long time and losing money, so long as more customers are paying than what you are losing.
Okay.
Yeah.
Now, can you explain the principle of compound interest in layman's terms?
Okay, I'll try. First of all, before I even explain it, compound interest is the greatest secret of wealth creation. It's the greatest secret. Now, what does compound interest mean? Let's say somebody is making 10% return on capital, and somebody else is making 20% return on capital. In 5 years, Mr. A, year one will be 100% plus 10%, so that's 110, 1.1. Year two, you make 10% of not 100 now, but 10% of 110. You started year one with 100. 10% is 10. So by the end of year one, what do you have? 10 plus 100, 110. Okay? So you trade with 110. In year two, you make 10% of 110 now, because you didn't start with 100 like you started last year.
Yeah.
You're now with 110. So your profit is now 11, not 10, because 10% of 110. So in year two, you make 11. You end up year two with 121. Okay? Year three, you make 10% of 121. So you make 12.1, not 10 or 11. So you see that after, by year three, that 10%, the naira value has grown, even though the 10% on capital is still the same, but the naira value has grown. If you continue like that, at some point that money becomes 200, 500, 1,000. I just keep going like that. But at 20%, you will assume that by year 5, for example, at 10%, you have 160 naira. So at 20%, you assume that by year 5, you have 2 times the man that had 10%. The answer is no. It's much more. It's much more. Because year 1, you make 20. So you go to 120. Year 2, you make 24. Because 20% on 120, you go to 144. Year 3, you make 28.8. So you go to about 172.8. Year 4, you make 34, about 34. So you now go to 213, thereabouts, 74, about 208. Then, is it 4 now? You make 40, 41, 42. You now go to 250. Now, you started with 100. So you made 150. The other person started with 100 and has made 60. So 20% guy made 150. 10% guy made 60.
True.
That's not twice. That's more than twice. Now, let me give you a very interesting one. Warren Buffett started around 1950, is it 65? Anybody that invested $1,000 in 1965, today will probably be worth around $500 or $600 million.
Wow. You had invested at that time with him. Hmm.
because of compound interest. Because it has been compounding at almost 20%.
Mm.
So the biggest secret of wealth creation, what rate are you compounding at? Then how long can you run it?
Then how do you bring that compounding into your business?
Oh, it's simple. It's your return on capital. But return on capital has so many variables.
Like,
How efficient are you? I'll explain. If I'm selling these phones now,
mm.
but I have a big office, I have a big car. So the profit on this phone is what I'm using to pay for those costs.
Yeah.
My return will be low.
Mm.
My competitor that is selling the same phone that doesn't have all those costs, his return will be high.
Okay. That's one of the variables.
Some of the variables. How efficient are you?
Mm.
How much capital are you deploying? How much other people's money are you using? For example, if one person is able to get the supplier to give the money, the phone on credit,
Mm.
and the other one has to go to the bank to borrow, the one that gets it on credit will be more profitable because they won't pay interest.
True.
So there are many things, many actions that you take in your business that will determine your return on capital.
Wow. That is so true. Now, how do you talked about savings and inflation. How do you hedge your savings against inflation?
Number one is you have to first understand where is the inflation coming from. In Nigeria, it's easy. Inflation is basically determined by foreign exchange rate. So the best way to hedge, therefore, is foreign exchange. In America, inflation is determined by many other factors.
Mm.
So you need to look for assets that hedge best against those factors. In Nigeria, some people use real estate to hedge against inflation, but that is not a perfect hedge.
Mm.
So yes.
Why do you say so? Most people believe that one to be the major hedge.
It's not a perfect hedge. I said it's not. I didn't say it's not a good hedge. It's not a
Okay. Not
perfect hedge.
perfect. Okay.
Number one, real estate. You don't always get a buyer when you want one. And number two, the value you end up selling a real estate asset is determined by how hot that asset is. If I have a house in my village now and I want to sell,
Mm.
it might not be easy to get a good buyer. Because the number of people that want to buy a house in my village are going to be few.
Yeah.
Number three, the higher the value of real estate, the fewer the buyers.
True.
So if I want to hedge $10 million,
Mm.
17 billion naira. If I put that in one building, the number of people that can buy a building for 17 billion naira in this country today are quite few. They're going to be likely companies.
Mm.
So getting that kind of asset sold will not be easy. The alternative would be for me to go and buy 100 buildings.
Mm.
If I want to sell 100 buildings at a time, it's not going to be easy to sell.
That's true.
So that's why I say it's not a perfect hedge. It's a good hedge, but it's not a perfect hedge because there are many issues
Mm.
that also can complicate things.
So which one is the perfect hedge?
Dollars.
Mm. Dollars. So are you saying dollar is not affected when it comes to crashing down, especially in that part of the world?
Nigeria's primary cause of inflation is foreign exchange. It's nothing else. The root cause of all our inflation is foreign exchange.
Mm.
Cost of petrol,
Mm.
foreign exchange. Cost of power, foreign exchange.
Cost of food.
Foreign exchange. People underestimate cost of food as being foreign exchange because you live in Lagos, the food is produced in Benin. So how does the food get to Lagos? It's transported. That trailer is not imported.
The trailer is what they are looking at.
The trailer is imported. If I was reading one particular social media whatever where the trailer drivers were saying that now to transport a trailer from I can't remember where. That look, it cost them about ₦1 million. Because in addition to the cost of the trailer, of course, you now have the various checkpoints.
Wow.
So those checkpoints will add significantly to the cost. Now, the security problem in Nigeria too has added to it.
Yes, yes.
Because security now means there are all kinds of checkpoints. You have police checkpoints, you have army checkpoints, you have NDLEA check, you have all kinds of checkpoints. And almost all those checkpoints are just toll gates for trailers. You pay to pass.
True. Why is foreign exchange affecting us so much in this part of the world, in this country?
Because everything we consume has a foreign component. And we only have one major commodity that we export.
That's oil.
And that oil right now is seriously down in terms of our production because of Niger Delta.
So we need to go back to producing more.
Yes. The problem, though, is that the discipline that the Obasanjo regime set was not followed by subsequent regimes.
Okay.
That's what got us where we're at.
That's a big problem on its own for us. Now, how can you distinguish between a financial opportunity that looks promising, but it's actually a trap, versus the one that is genuinely beneficial?
You need to know what you're selling or what is being sold to you. Knowledge.
Okay.
See, I can't overemphasize the need for everybody to become more knowledgeable in whatever you're doing. Now, in business, basically what we're saying is look carefully before you take any decision. In law, they call it covered emptor. I hope I'm pronouncing it right. Let the buyer beware.
Covered emptor.
Let the buyer beware. So you can only choose between what you know. So let me give you some examples. Many people say, this phone in China is $200. How come it's 500,000 naira in Nigeria? These people that are importing phones are criminals. Okay? So $200 is 340,000. 500,000. So the profit is 160. It looks so profitable. But you have not added the cost of transporting this phone from China to Nigeria. You have not added the cost of clearing this phone at the port. By the time you add up all those costs, are you sure your cost will not be more than 500,000? So, not having enough valuable information about an opportunity is a trap. So, get this up. The fact that you don't have enough information in itself is the trap. It's not the opportunity.
It's the information.
It's the lack of information on your part that is trying to make that choice that is the trap.
What do you think about cryptocurrency?
I'll start with the comment that I'm old school. So what I'm going to say are what I call my concerns, because I don't invest in crypto because I don't yet understand it the way I would like to, and I'll explain. There are three types of things that are traded internationally in exchanges: shares, commodities, currencies. Each of these things, I can value them. Okay? I can value the shares of GT Bank, or the shares of Shell Petroleum, or the shares of Apple Computer by going through their financials. So I can have an idea of what that share is worth. I can value the price of commodities because there is a tangible commodity, whether it is palm oil, whether it is sugar, whether it is crude oil, whether it is gold. There's a tangible commodity. There's something I can hold that I can value. I can value currencies because every currency is just simply the government of that currency borrowing and saying, we have money to pay you. Whether it's US dollar, British pound. I wish I had my wallet here. I would have shown you a pound note. In the British pound note, at the back of it, it says, the Bank of England promises to pay the bearer of this note. If it's a £5 note, £5 upon presentation of this note. So when you carry 1,000 naira bill in your pocket, the Central Bank of Nigeria is saying, if you come to Central Bank, we'll give you value of 1,000 naira. So every currency is backed by a government. So when it comes to crypto, I'm now asking myself, it's not shares. Okay? It's not a commodity. Neither is it a currency. So how do I value it? That's my problem. What is the backing behind it? How do I value it? If it's shares, okay, I know the company, okay, so I own a part of that company. If it's a commodity, okay, if it's 1 barrel of crude oil that I own, or 1 bag of sugar, or 1 bag of palm oil, I know what I own. If it's a currency, I know which central bank I'm going to. In crypto, I'm asking myself, what is backing it?
What is backing it is the belief that people have for it. Because
now, see, it's just belief. There's nothing else but belief. Which means that if that belief dies tomorrow, that's the end.
What if it doesn't die?
I'm just coming. Hold on. You see, remember I said something at the beginning about scenarios. Okay, so for me as an investor, I'm always looking at scenarios. Let me give you an example. What happened in 2020 is something that happens once in 100 years. My parents, for example, never saw it because the last time it happened, they were not yet born. And by the time it happened in 2020, they were all dead. If anybody had told you the whole world was going to be at a standstill, airports shut, no planes flying, trains not moving, if anybody had ever told you before 2020 that such a thing could occur, you would have said it's impossible.
Sure.
But it occurred. So, when it comes to scenario, if you say a time or something, an event can never occur, that will make everybody to stop believing, I'll tell you that it can.
But isn't it even better to remove the hold on the banks have on people and on money and things like that? Why don't you decentralize it by making sure that you have something that you can?
I have no problem with decentralizing. My problem is who is backing it. There's no central bank. There's no government backing it. There's no commodity behind it. It's just faith. I'm a believer. But I'm not going to invest on something that doesn't have any substance. I can't.
Most people have become millionaires and billionaires from it.
Okay, let me give you an example. You know, there was a time in Nigeria around the year 20, between 2003 and 2007,
Mm.
where the stock market in Nigeria, every share, everything was just going up. And every day people were expecting it to go up. And it kept on going up. In fact, even abroad, globally, there was a stock market crash, or there was a global crash that happened in 2007, September. Everybody that believed they were making money for years until that crash. When that crash came, the people that were still holding those things lost everything. So I have no problem with people making money on it. I won't, but I have no problem with people making money on it. All I'm saying is that the risk is too high for me to quantify. And if I can't quantify a risk, I can't take that risk.
True. Why do people have so much belief in the American dollar more than other currencies?
Okay. Two big reasons. Number one is that the most tradable currency in the whole world is the US dollar. And that's why many commodities are priced in dollars. Crude oil is priced in dollars. Gold is priced in dollars. So that's principle number one. And because many commodities are priced in dollars, most nations of the world hold their foreign reserves in dollars, largely. If you look at Nigerian foreign reserves, I'm certain nothing less than 80 to 90% are going to be in dollars. So that's issue number one. Issue number two is that the US economy is the biggest and most diversified in the world today. If the world continues for another 50 to 100 years, the US dollar will significantly lose its value. Significant.
Why?
Because China and India will be bigger economies.
The pound is more bigger. Why is that? Why doesn't that one have its own value than the US dollar?
The value of a currency is not necessarily in the current exchange rate.
Okay.
Now,
Why is the pound not having that kind of value for itself?
the pound is the same reason why I've said that the British economy that backs the pound is a far smaller economy than the US economy. British economy is currently world number 6 or number 7. US is bigger, China is bigger, Japan is bigger, Germany is bigger, even India might be bigger than UK now. So UK will probably be maybe number 6 in the world today. And then, how many commodities are traded in pounds? Very few. After the US dollar, the next currency in the world today is euro. Because the whole of Europe uses euro. And the whole of Europe is a 30 trillion economy. So after US dollar, the number 2 currency in the world today is euro. After euro, maybe yuan or Japanese yen. So pound is not anywhere near.
It's about the economy of that country
and the influence that currency gives.
Now, when it comes to vision, what do I need to do to ensure my dream comes to pass?
So that's simple, not easy. Simple. Number one, write it down.
Okay.
Write it down. And when you're writing it down, too many of us write vague visions. How to be a millionaire. What does that mean?
What's a millionaire?
That's not a vision. You want to be a millionaire by doing X, Y, Z by so and so time in so and so place. Because how to be a millionaire is a vague, very vague statement. So it has to be written down. So number two, it has to be clear. It has to be very clear and very concise. Number two. Number three, you have to believe it.
Believe it.
You have to believe it. I mean, somebody can say, how to be a billionaire in dollars next year. You know, be a clown.
It's not possible. With God, all things are possible.
See, the only way that can happen is if you win one of those US lotteries. And there's only one person in 8 billion people that wins it once every 2 or 3 years. So the chances of that happening
Zero.
It's not zero. It's so minute that you might as well equate it to zero.
Okay.
Number four, you have to pursue it.
Pursue it.
You have every day, you have to be doing something towards accomplishing that goal. Not that you write it down today, tomorrow you are doing something else. Next tomorrow they say, there's an opportunity to come and work in London as a carer.
Yes.
Oh!
You leave it and jump.
That's bullish. That's bullish. You have to pursue it. Number five, you must be resilient and determined in your pursuit. This door blocks, you find another door. It blocks, you find another one. You fall 10 times, you rise up 11. You fall 50, you rise up 51. If you do those five, the chances of accomplishing it is above 50%.
Just 50. With all these things, just above 50.
Yes.
It's not even 90%.
No.
What can make it to 90%?
Supernatural. Because who knows whether you'll be alive then?
True. It can be described as providence.
There are certain things that are beyond our level of control without the advent of a supernatural dimension to it.
And some, what about anybody that will say it just has to be what you can do? Like all those things you described. That is what some people believe, that if you put in all this attention, you are going to get what you want.
You could die.
Okay. You're not alone in your life.
I mean, who knows who will be alive tomorrow? There are certain dimensions of this life that we all know that it's not within your control.
Now, what is the limitation to how far I can achieve anything in life?
Many. How big your dream is, number one. How aligned are you with your destiny? Number two. How much work you put in, and not just ordinary work, wise work, developing yourself in the right things. How much of that you put in, how much resilience you have. And then, of course, number five will now be providence. How much luck, how much things happen. Look at Kamala Harris, for example. She wouldn't ever have been in her current position if not for a few factors. Number one, Joe Biden was looking for a female vice president. And among the various female contestants that they had in the Democratic Party, she was the one that also had a minority background. She wasn't full white. She's half black, half Indian. So that was one of the major reasons why she was picked to be VP to Biden.
To appeal to that minority class.
Exactly. And then number two, as Biden has continued to grow older, his age is now beginning to tell more and more, and he was forced to step down. Kamala Harris didn't contest for Democratic Party nomination. She just got there.
Yeah,
That's providence. You can't plan for that.
that's true. Now, it's often said that many billionaires or wealthy people often pay the least taxes or they don't pay tax at all. How is that? Were they able to achieve that? And how can other like young entrepreneurs they also be able to achieve same, same thing as well?
I'll start by saying that the rules of life are never fair.
Never fair.
Even when you look at global politics, there's never fair. You know, America does something, they say it is right. Iran does the same thing, they say it is wrong. The rules of life are never fair. So let's get that out of the way. Now, when you come to taxes, anywhere in the world, the rich always have access to all kinds of schemes and loopholes. I'll give you a very interesting example. Have you ever looked at the profit and loss statements of Nigerian banks? Did you remember, for example, sometime recently that Dangote said Dangote Cement pays more tax than almost all the Nigerian banks put together? Do you know why?
Why?
It's the rules. When you invest in Nigerian government bonds, your income is tax-free. Yes. That's an incentive that the government gives to encourage people to buy bonds. So it's tax-free. Check the average Nigerian bank. They have trillions investment in government bonds. So if you're a GT bank or a Zenith bank or a First Bank, and you have, say, 2 or 3 trillion naira invested in Nigerian government bonds, that means 400 or 500 billion naira of your entire profit is tax-free.
Wow. Can you imagine? Oh my God. Is this fair?
On who now?
That's true. On who?
So because the question is, the government too needs money. So they need to encourage people to give them money. That's why sometimes in some economies, people clamor that government shouldn't be borrowing heavily from the same market because they're making it difficult for you and I to borrow from those same markets. Because the government can offer things that we cannot offer.
Yes.
So, but in a place like Nigeria, government is the biggest borrower. So the way they do, so when they borrow, and banks, if you're a bank, who will you rather borrow to? To Benzik or to the federal government of Nigeria? It's the federal government of Nigeria now. So they're encouraged to borrow to government. And part of the benefit of borrowing to government is that it's tax-free.
That's so true. So that means you should know more about financial so I can be able to take advantage of those loopholes.
Exactly. You know, sometimes I laugh when people are complaining that banks are making so much money, they must be criminal. You don't understand what is going on. The rules makes it like that. The rules.
How do banks make more money? Is it through this format or through the people's savings or which other format do they make more money?
So, okay, let me explain another very interesting thing that people don't know about banking. In any economy where interest rate is high, banks will always make stupid money. Any economy. every current account that you have earns zero interest, right? So imagine a bank has 1 trillion naira in current account. And imagine that bank doesn't borrow anybody money. They just take that 1 trillion naira and buy Nigerian government bonds at 20%. That bank makes 100 billion.
That's true.
So that high interest rate that the government is using because of inflation is creating a situation where banks just make stupendous money for being off. It's not their fault. They're not the one that. It's not their fault. They're just taking advantage of the situation.
So how do you compare fintech banking now with the normal traditional banks that we have?
Fintechs basically are fintechs. They're just likely technology companies using technology as payment platforms. They're not full banks. They're just payment platforms. So some of them now use microfinance bank licenses to try and offer some other banking services. But those services are limited to just basic loans.
Do they make more money?
The banks? No.
Because the giant now that is moving things now is okay, carrying a lot of weight. So I don't know how it's comparing with other banks.
I've not seen their financials. But I remember you used to hear of Kuda Microfinance Bank. They made a lot of waves some time ago. When I saw their financials, I knew that they were not going to survive.
Seriously?
Yes. They were losing money big time. I haven't seen Opay's financials, so I can't say anything about. And Kuda had customers. They were doing transactions a lot, but transactions don't equate profits.
That's exactly where the thing is. How can you be making transaction without making profit? That's where the confusion is.
So there are, in Kuda's case, when I looked at their financials, there were two big problems. Problem number one was the cost of making those transactions, the cost of the software, the cost of that technology, running that technology was expensive. So that's problem number one. Number two was that the loans they were giving out was not being paid back.
Okay.
So a combination of losses from the loans and then losses from the cost of what were operations is a problem.
And you can't do anything about the loan.
About the loan, you see, a fintech cannot do banking the way banks do banking. Banks use normal credit systems. Fintechs try to use technology. You see, but when you're using technology in an environment that is not yet as sophisticated as the US market, for example, people get away with a lot of things.
Okay.
So that's where the challenge is. But I don't know how. I've not seen Opay's financials, so unless I see it, I can't make any informed opinion.
They're making massive waves. Now, are there changes you may like to see happen in the banking system in order to aid more consumers or customers?
The changes are not from the banks, but rather from the government. So long as you have high inflation, the central bank will always have to have high interest rates. And so long as you have high interest rates, you can't have mortgages. The banks will make a lot of money for doing almost nothing. There's nothing anybody can do about it.
Now, I want you to differentiate this mindset, because as someone that grew up in this part of the world, and when it comes to their relationship with money, it's totally different from someone that grew up in someone like America, because their relationship with money or how their financial intelligence. So, because when it comes to how you spend money, like you said, the dollar has more capacity and more power when it comes to the things you're buying and what you're doing. But in this part of our world, the naira, most people spend currency. So what do you think is the difference in reasoning that makes someone in America can typically make more money than someone here?
It has nothing to do with reason. It has absolutely nothing to do with reason. It's the environment.
Okay, just environment issue.
The environment. Another thing that people don't understand is that Cost of living in America is very high.
Very high.
Oh yeah.
But they make the money.
So, in a way, yes. Let me explain further. A room of this size in Manhattan might cost you $4,000 a year, a month, as rent. A room of this size in Manhattan. Manhattan is one of the most expensive parts. So, average house rent in America could be about $1,000 a month. What's the average house rent in Nigeria?
A month or a year?
Well, let's start with a year.
Say 100,000.
100,000 a year?
That's, you say average. Depends on the area.
No, you can't. Can you get a flat for 100,000?
No.
How much is a flat?
Face me, I face you, what I'm talking
No,
about.
how much is a flat?
A flat, let's say a million naira.
Okay. How much is that in a month? 80,000, 85,000. Divided by 1,700, $50.
That million naira depends on the place. So.
I know.
Some places could be 10 million.
10 million is likely to be either a big house on the mainland or a flat on the island. $1,000 I'm talking about is not a house or a flat in the very expensive suburbs. I just told you Manhattan, which is an expensive suburb, $4,000 for a room. Okay. So, the flat you get or a house that you get in America for $1,000 will probably cost you less than $100 here. The last time I was in America, no, sometime last year, we're in America for about 5 weeks. So my hair had already grown bushy. So I wanted to have a haircut. So I asked, how much is a haircut? They said, I got $41. I said, $41. You know what that currency is? It's like 70,000 naira. You know what I did? I entered Walmart, bought myself a full set of clippers for $22.
Seriously?
Yes. Electric clippers, the best. $22. I told my wife, I said, see this hair, we will keep up. When I get to the I have my haircut. Basic meals. I mean, I'm talking cheap food. $12, $13. So it's expensive. However, you're able to live a better lifestyle. So that is given. So it has nothing to do with the mindset, just the environment. But let me also say something that might shock you. Do you know that phone transfer for payments is not done in America or in the UK?
Like to transfer money to someone to make payments?
Yes, on your phone.
Why?
They don't have the technology.
Are you serious?
Yes.
Why? Is it intentional or they don't know?
Next time, maybe tomorrow, find any of your friends that you know in America or in the UK and call them and ask them whether they use their phones to transfer to
Buy something.
to buy some. Well, they can use their phone to pay in a shop, but to transfer to a friend the way you do here, I'm not sure they can.
Like the way I can transfer money to you.
Exactly.
Is
They
it
only have specialized platforms for that.
they intentionally didn't do that or they don't know about it? Which one?
So I don't know why. I mean, for us to be able to do it, obviously they can also buy the same technology. So I don't know why. Maybe it's the banking laws. I don't know. But they don't.
And I want to ask now, you know, the country for most people, they feel is very difficult and it's very hard for
The environment is challenging,
it's
yes.
challenging at the moment. So when we talk about this financial intelligence and financial management, some will say they don't even have for them to even manage. Because if you're talking about the fact that I should make sure that whatever I'm eating, let's say I'm earning 100,000, you say my food should not exceed particular percentage. And let's that percentage you're saying my food should not exceed, it means I'm going to starve. What do I do? What should they do?
You know, I've always said
Mm.
everybody needs to educate him or herself. That's step number one. Step number two for most people is most people have a blockage as to what they can do to make money. Nigeria currently has, I don't know how many, a few 100,000 graduates every year.
Mm.
And you know what all of them are doing? At least 50 to 60% are writing applications. But I have a different mindset. The mindset is that as a graduate, you've been taught, your mind has been developed to a particular level.
Mm.
So even if you have to go to a construction site, in fact, let me use this example to buttress my point. Remember the late Ojukwu?
Yes.
Do you know much about his story?
To an extent.
His father was the richest man in the East, almost arguably the richest man in Nigeria.
Yeah. Yeah.
Sent him to Cambridge to go and study.
Mm.
He was using his father's Rolls Royce sometimes to go to school. When he came back to Nigeria, he told his father he wanted to join the army. His father said, over his dead body. So Juku took a car and drove to Zungeru or somewhere in the north. I went and reported to one of the army recruitment centers. This is a guy that came with masters from Cambridge.
Hmm.
I went to join the army as a recruit.
Hmm.
You don't know this story? So after he joined the army as a recruit, one day he had an argument with the sergeant major. And the sergeant major reported him to the expatriate English officer. So the expatriate English officer called him in, that what happened. And Ojukwu in Queen's English responded to the officer that, sir, the sergeant major was teaching us how to use a gun and the different parts of a gun, and was calling the safety catch samplica. And I said to him, it is not called samplica, it is called safety catch.
Hmm.
That's why the sergeant major went to report to the English officer. It was then the English officer, or then Ojukwu caught the English officer's attention. He now interviewed him and discovered he had a master's from Cambridge, and immediately recommended him to be made an officer.
Wow.
That's how Ojukwu went from a recruit to a lieutenant.
Hmm.
So he disregarded the Cambridge, he disregarded all those things. He said, I'm going to join the army. I'm going to do whatever it takes to join the army. The training and background I have is such that I will excel in that environment. And he did. I mean, before he was 30, Ojukwu was already a colonel. It was the day I think he was promoted major that his father drove down from Lagos to go and congratulate him. Because the father had had an experience with an English officer that had the rank of a major. And that officer had rubbished him. That his own son was now a major of a big issue. So many of us need to have that kind of mindset. That regardless of all the school I went to, if I have to go and start with a POS machine or drive well, I don't encourage buses because somehow there's a spirit in those bus drivers that if you put a PhD from that's never been to Nigeria, that came from the US, that has a PhD, give him downfall in Lagos to drive. In 6 months, you won't recognize that guy ever went to America. There's a spirit that operates in those people that is, I don't understand it. But the bottom line is, each one of us needs to be able to do what it takes to start something on our own. I assume I might have an advantage in the sense that my parents were they both started as employees and corporate people, but they ended up in business. So I grew up in an environment that was entrepreneurial. So it's been in my blood to be entrepreneurial from very young. I find it difficult that many people, after years of looking for jobs, they're still not making any. And they're having a problem changing that mindset.
Now, this our current dispensation or generation. You know, it looks a bit different from your generation, your parents' generation. As of then, people like Gowon became head of state, I think around 27 or 30 something. Very
31.
Young, 31. While Obasanjo also a very, very young age.
37 or 38.
Many people were achieving a whole lot of things in their early 20s, early 30s, or late 20s and things like that. What happened this period that you see 35 years old man still even living with his parents? This is the problem. Is it the country or the individual?
The people setting up these IT platforms, are they young or old?
The IT platforms.
Yes, in Nigeria. The fintechs you even mentioned, are they young or old?
They're
young. They're young. So what does that tell you? Every generation has certain fields and sectors that booms in that generation. In our generation, the people that benefited the most were those that went to banking. Because until the late 1980s, you guys don't know what banking was then. In those days, you go to a bank to deposit money. You fill a form, then you collect a tally number. In fact, many times after filling the form and collect that tally number, you go away for 3 hours and come back before it's your turn. For you to make a lodgement. That's how banking was. All this computer, whatever did not exist. In fact, even in my time when we started, if I give you a check in my branch in Lagos, and you go and lodge it in your branch in Kaduna, it will take 30 days for that money to play.
Why? They have to go on the movement.
Because the branch in Kaduna will go to Central Bank Kaduna to go and present that check. Central Bank Kaduna will send it to Central Bank Lagos. Central Bank Lagos will now send it to my bank in Lagos to debit my account before they can credit your account. So in those days, some of us in the banks, we used to do something that was unethical. So you get on to give you a check from Kaduna and you log it to your account and you try and get cash from that money, knowing fully well that before the thing gets to his account, it might be 30 days. So you have basically borrowed money for 30 days.
Wow.
So it was when Babangida came and liberalized banking
Mm.
that created an opportunity for my generation. As at that time, you could move from, in fact, a fresh graduate can become a manager in less than 2 years.
Mm.
How? So, as at that time, if I remember the order, you had trainee banking officer, assistant banking officer, senior banking officer, assistant manager, deputy manager, manager. So you join a bank as a trainee banking officer. 3 months later, 4 months later, you go to another bank because banks are opening every day. And you go and join them. But you tell them that, look, I'm a trainee banking officer. I've been promised assistant banking officer in the next 6 months. So if you want me to join you, you have to give me banking officer. And promise me that if I perform, you will make me senior banking officer in the next 6 months. So he joins the next bank after 6 months as banking officer with a promise of senior banking officer in 6 months. 6 months down the line, he goes to another bank that's just opened again and says, look, I'm a banking officer. If you want me to join you, you can't give me senior banking officer because my current people, they've promised me senior banking officer anytime from now. So if I'm to come and join you, you must give me assistant manager. In 1 year, he's already assistant manager. He has only 2 steps. So when he gets there as assistant manager, he does another 6 months, goes to look for another new bank, and say, I'm the one that's been running this department. I did this for this new bank. I know how to do this. I can do this. I can do this. Or says, I'm assistant manager. I will soon be deputy manager. If you want me to come and join you, make me manager. That's how in those days you could find 31-year-old managing director of a bank.
Wow.
At adopted salary was MD at 31. Yes. Fola Diola and Co were at 37. Herbert Pigray that just died became executive director around 35 or 36 in GT Bank. That was the opportunity for our generation. The people that are working in UAC were still waiting till 50 before they became general manager. But those that went into banking had a rapid growth. Your generation is the fintechs, anybody that is doing things that has to do with technology, that will have rapid growth. Anybody in the other areas don't have any rapid growth.
So by converting what you are doing to technology, you take advantage of it.
Because this generation is technology that is thriving, driving everything.
So if you say then there was no computer, all those tech, if then there was no computer, how do they, when they come with cash, do they keep it, or how do they type in? How do they take record? Did they write it down, or what? Or they have books?
They had ledgers. So in those days, bankers, especially in operations, they don't close to 8 because you have to manually calculate all the books and make sure everything balanced. So you can spend 1 hour looking for 10 naira. And by rule, you can't go home until the books balance.
Actually, I remember there's a time that you used to go to the bank, that before they give you money, counting the money 1,
Yes.
2, 3, 4.
Yes.
They have something to do and
there are no machines.
there are no machines that do all of that.
Yeah.
So that means that period is it easier to steal money from the bank?
Not really. These days it's easier because it's electronic.
Yeah.
Electronic.
Easier now than then.
Yeah. Now people can scam you using your phone.
I mean,
then you have to physically go to the bank to go and steal physical money. So it's only those that are working in the bank that could steal physical money.
Was it easier for those working
But
in
the
the bank
amount of money that you could steal physically was very limited.
It was cash economy. It was cash
how much cash was available there? When I joined banking, the biggest bank, the total balance sheet was 1 billion.
Naira.
Yes, total balance sheet, everything.
Because that time
That was the
anything,
first bank. Those are the big banks.
yeah, because that time anything you want to buy, it has to be cash. There's nothing like a transfer.
No, there's no
Or,
transfer.
so you
Either
bring the
cash or check
or you go and bring check. So,
or bank draft.
so that means people that period, the amount of money people make that period is going to be limited.
Very small. Or small. But my father bought a Mercedes Benz for my mother in 1977 for 9,000 naira.
9,000 naira.
When I started work in 1985, a fresh graduate was on grade level 8 then. I don't know what they call the grades now. The salary was 300 naira a month. You are entitled to a loan to buy a brand new Volkswagen Beetle for 3,000.
3,000 naira.
Yes.
I cannot eat to a restaurant now.
A grade level, a master's degree, start with a grade level 9. Grade level 9 was 400 naira a month. You are entitled to a loan that will buy you your 504 at 5,000 naira. Brand new. As at that time, the only people that rode to Kumbos were university students. So your parents want to buy you a car to go to school, they go and buy Tokumbo. People that work, nobody, there's nothing called Tokumbo. Tokumbo only started in 1987 because the exchange rate collapsed in October 1986. In 1985, one naira was $1.
Seriously?
Yeah.
Wow.
Yes. When we first went to America in 1978, one naira was $1.50.
Wow.
Yes.
Is there any stage that it will look like you have? Is there anything like too much financial intelligence that will lead to decision paralysis?
No.
Okay.
No.
The more you know, the better. So.
The more you know, the easier it is.
That's good. Then what do you have, to analyze it, what do you have as you give Nigerians when it comes to their financial knowledge, in the way they can improve it finally, as in the general advice and things
Keep
people
reading.
cover?
Keep reading. Read. Learn. Learn from magazines, from articles. Just keep reading. There's so much information on this internet. Just keep learning. Learn. Just keep learning.
So much information.
Yeah. I mean, in those days when we were younger, if you needed information, you either go and look for Guinness Book of Records or go and look for an encyclopedia or you go to a library. Today, the only information you ever need is on your phone. It's on your phone. The one that amazes me about young people is there's so much information available, but we spend all our time on pictures and nonsensical things that don't educate us. Anyway, there's so much you can learn with your phone. You can learn all kinds of financial limits. I've read so much and I keep reading every day. Like I said the other time, I was just reading Berkshire Hathaway's annual report. So I'm constantly learning. What are they doing? How can a company have $328 billion cash? How? What are they doing? What's there? It's not rocket science. It can be done. So let's spend more of our time learning. What you learn for yourself, nobody can take it away from you.
Yeah, most people, they spend time on social media. Do you think social media takes away people's time and attention to do things, or it increases peer pressure?
It does both, and both are terrible. It increases peer pressure because people tell you they are doing things that many of them are actually not even true. Peer pressure, and it's a waste. We waste so much time just either going to jokes or looking at pictures. Whereas we should spend all that time acquiring information that is relevant.
And you see also people claiming what they are not.
Absolutely. And people show you, see, I can travel abroad now and take a photograph standing beside a Rolls Royce. I can go to any major city in the world now and rent a Lamborghini for 1 hour and drive it around and take a picture of myself driving a Lamborghini and upload it on social media. I say, this is my latest Lamborghini I just bought. Look at me driving it and cruising it around. I could drive it somewhere, buy something, and drive it to a house I'm staying, park it, take photographs there, and I still have enough time to go and return it to the people I rented it from, and come and load it up on social media. I just bought myself a Lamborghini. That's my house in Miami. That's my new car. It's a whole lie. It's a lie.
What's the fastest way to wealth?
Let me say this. The fastest way to wealth is not the best way to wealth.
That's contradictory.
No. Lottery is the fastest way to wealth.
Okay.
I mean, somebody won almost $2 billion the other day, even though the cash value would be around $900 million. That's the fastest way. But that guy, in the next 10 years, I'll be pleasantly surprised if he's still worth 50 million. He got 900 million cash. I'll be pleasantly surprised if 10 years from now, he's still worth 50 million. Because in less than 6 months or 1 year, he has already bought over $100 million worth of assets that are losing value.
Assets that are losing value.
Luxury houses.
This house is not an asset that is supposed to appreciate value.
Luxury houses. A $30 million house. How many people buy those houses? He's going to have to sell them when he needs money. I remember what I said at the beginning, that when you are selling and you're under pressure, you never get the right price. You buy all kinds of exotic cars. And the reason is that his financial intelligence is not at $900 million. He doesn't have the capacity to manage $900 million.
True.
So that money is going to crash to the level of his capacity.
Yes.
He might end up being so broke that he goes back to earning $5,000 a week. Because he just keep wasting that money. Not because he wants to waste it. He doesn't know any better. So that's why I said the fastest way to make money is not the best way.
Which one is the best way?
The best way to make money is to first develop your mindset.
Okay. Develop your mindset.
After you've developed your mindset, with that developed mindset, create products and or services that can solve problems. Once you do that, then you create platforms to warehouse these products or services. After doing that, diversify. Let me say another very important thing that I think it's there are 1,001 ways to make money. There's only one way to keep money.
Only one way to keep money.
Only one. So every rich person in the whole world that doesn't keep this one way will one day become poor. Either in his generation or his children's generation.
Wow.
And that one way to keep money has 3 legs.
3 legs.
Any leg that is missing is enough to make you poor. What are those 3 legs?
Let's need one leg first for the 3 legs.
That
one way. For
there's only one way. That one way, that's what I'm saying. That one way is a 3-part.
Okay.
It's like a fruit that has 3 parts.
Okay.
Any part of that fruit that is missing makes that one way to be ineffective.
Okay.
Is that clear?
Yeah.
So what are the 3 steps or the 3 legs of that one way? Number 1, diversification. If all your money is being made from only one source, you become poor one day. Because that one source, someday, either somebody will come with a new technology or something can happen in an economy that will shake that industry. So that's issue number 1. You must be diversified. Issue number 2, liquidity. Maintain ample liquidity. Why? Because whenever there is crisis and there is always crisis, either national crisis or even global crisis. The last global economic crisis was 2007. In fact, many people are predicting that in the next 5 to 10 years there should be another one. It is whenever there is crisis. What happens in crisis is that the banks stop lending. They start calling their loans. Money dries up. So it's only the money that is your own that you can rely on. So if you don't have money that is your own at that time, no matter how big you are, you can collapse.
Wow.
Yes.
No matter how big you are.
Yes. Because of liquidity crisis. The third leg, frugality. Spend a very small amount of what you are making. If you are making so much and spending so much, one day you're going to be broke.
It's a matter of time.
It's a matter of time. You know why? If somebody is making $1 billion and spending 500, that 500 becomes a fixed lifestyle cost. The year that person makes 400 instead of 1 billion is in the red.
Yeah. True. He has lived his life only on
It's
that.
only on that 500 million. Because he already has 5 houses, he has 20 cars, he has to all those bills. You can't change that overnight. So God forbid if the following year, instead of making 400 million, he makes 100 million. So in 2 years now, he has lost 500. If he now makes a loss in the 3rd year, that guy is going to make trouble. But if he was spending only 100, when he made 400 million, he still made profit.
Yes.
When he made 100 million, he still at least covered his bills. So it's only in the 3rd year that he starts feeling any pain. The other man has been feeling the pain for 2 years.
Okay. That is why you talked about making sure whatever you are spending is at the bottom.
Your capacity to withstand shocks is significantly higher when your costs are low.
Wow. Wow. This is powerful. Wow. And it's so true. Yes, when anything shakes you, you know that whatever you are spending is already. But that diversification you talked about, some people will say, does it mean I should go and put my hand into multiple streams of income?
Not necessarily. So, if you have one main business, step 1 is, can you have more businesses? Can you have more geographies? If you can't, then you might need to have what you call cushions. Invest in a block of flats. Invest in shares. Invest in bonds. So at least there you already have 4. There's your main business. There's your block of flats. There are your shares. And there are the bonds. You already have 4.
Okay.
So if anything happens to your main business, you still have your rent from the shares. I mean from the property.
Mm.
You still have your dividends from the shares, and still have your income from the bonds.
That's very true. So that can create the cushion enough.
Exactly. And if your costs are low, those three might be able to even sustain you forever.
Yes.
Even if the business goes.
I see that many Nigerians do not like that the insurance. What do you think is the advantage of people putting buying into insurance, either life insurance or things like that, or any form of insurance?
Life insurance is likely an education problem.
Okay.
I mean, for example, these days now, many people are learning some of those things. So, for example, there's some insurance products now whereby somebody that has children in school, you can have a life insurance on yourself in such a way that if you die, those children's school fees will be paid to the family.
Mm.
Now, if you tell the average man who has a family and has children, that kind of thing, that's a product that they will be interested in. Because you know that anybody can die at any time. So there's an education problem. In the past, we used to have a cultural problem. People say, so you want me to die tomorrow, ba?
Yes.
But now people are learning that, this thing, you're just being wise. I mean, you and I know a few people that have died that were young and their children are still in school. If there could be a way in which their school fees will have been covered till they finish university, I mean, I'm sure people will sleep easier. So there's an education problem there too. But the third one that is also a big issue now is economic. People's priorities are, first of all, let me feed. So before you start thinking about insurance, I will take my chances.
Or some will say they believe in God, nothing can
No, they're taking their chances. I mean, it's like, for example, even health. I remember there was somebody that came once from the UK and said, because our medical facilities are not working, people believe in miracles. Because they can't afford it. so and generally, anywhere, even from historical times, the poor have more faith in miracles than the rich. That's why in the Bible you see Jews seek after signs, while Greeks seek after wisdom. Greeks represent the rich with intellect. They are not looking for miracles. They are looking for, this your kingdom of heaven. What does it mean? The Jews live this story. I want a miracle.
That is true. So that's why it comes down to this place. Everybody will just talk about the fact. So long you cannot afford something, you just believe
it's miracle. It's just
God
miracle.
will do it for me.
Exactly. And that's everyone here too. We do some very silly things. You go to anointing service to be rich, anointing for this, anointing for that. It's because of we just now our poverty has now entered our mindset. So you just believe that you need a supernatural intervention for just turn around everything.
Yeah, but you mentioned the fact that there's supernatural in
Remember, I said that there's a dimension of the supernatural when it has to do, for example, you don't know what tomorrow will be.
Okay.
I didn't say use the supernatural to do your work. No.
And that is where many people rest on. So, like, people will have property and they will not insure it. Do you think all these things are relevant? Because people will say, please, many insurance companies don't keep to their word. So why should I give them money for all these things and they don't do it?
Okay, first of all, insurance has evolved. Competition has made it in such a way that it's difficult for you to survive as a player in this market today if you are not honoring your responsibilities. It's difficult. So let's put that. But the reality is that for many, there are many risks. I have a neighbor just across whose house has just been pulled down. by government. Now, if that house had certain levels of insurance, some of that cost could have been covered. So part of the challenge with some insurance is that many of us don't imagine the likelihood of the event occurring. So because of that, you just say, no, it can't happen, Joe. But the challenge for most people is that if it does happen, the cost that you incur is so much higher than the cost you would have incurred if you had insured it even for 10 years before it happened. That's where the problem is.
Some just believe, like you said, that nothing will happen and that money that they spend will just go on waste. Because if you spend all this money and you get to that particular time, will they refund it back to you? No, it's gone away.
There's some insurance that is refundable, but most insurance that is refundable are more expensive. The cheapest form of insurance are the ones that are not refundable. But for me, I'd advise most people to, as much as possible, try and insure your assets.
Because in the Western world, most people believe in insurance, but here
in the Western world, okay, let's also not understand, let's not assume that we are different. Okay, we're not different. Let me give you an example for you. I remember one of my friends and I went to South Africa in 1994 for a training. And we're going out one night, and there was this traffic light. There was a traffic stop at about 1 a.m. Nobody anywhere. And the guy stopped. And my friend, typical allegation, was like, why are you stopping? There's nobody now. Let us go. You know, there are cameras. So you cross, the camera takes you. The following day, you get a ticket. Simple. So because of that, everybody obeys. You know, when the government said they were going to put, you know, there are cameras now on 3rd Mainland Bridge.
Yes. I was observing them, so I was wondering, I said, all these cameras, are they working?
Oh, they are working. But the government has not started implementing, because they want to put 80 kilometers per hour on the bridge. Oh, yes. And there are at least 6 or 7 cameras on each side of the bridge. So if they start implementing it, you suddenly discover that everybody is going at 80 kilometers on that bridge. So we're all human. We respond to certain things. Now, going to insurance abroad, almost every house that is bought abroad is bought under mortgage.
Okay.
There's no bank that will give you a mortgage and not insist that you have full insurance.
Wow.
They won't give you a mortgage.
You must have it.
You must have it.
Wow.
So that's why it's not because they like insurance. Okay. It's because the banks that finance those assets insist you must have insurance.
There's more of a lucrative business there than here.
Yeah, I mean, it's because they are forced to buy. If you bought your house with your own money, nobody will force you to take insurance. But if it's bank that's giving you the money to buy that house, you pay for every form of insurance possible.
Wow. No wonder I will see that some people will post that they have bought house there and you hear that they are paying mortgage for it. But people can come here and buy a house and they buy it once.
Yeah.
So that means we have more advantage here than them in that regard.
In that regard, yes. But in the sense that you have the freedom to choose whether you are paying insurance or not. But it's not as if we are more averse to insurance. No. It's the systems there that enforce certain things.
If they give the opportunity to locate and be there completely, will you choose that than in the environment? Yes.
No.
Why? But your system looks like it works better.
Now, so I'll take UK and I'll take America because they're different. America has more opportunities for an entrepreneur. UK has very few opportunities. for an entrepreneur. So if I had to choose a place, it would probably be America. Definitely not UK.
And what is the opportunity?
Sorry?
The opportunity you're talking about, what is it?
No, as an entrepreneur, I mean, there are thousands of companies in America I can buy. So there are more, and see, for me as a person, a place that does not allow me to become an entrepreneur is going to be a problem. UK is not particularly open. Not because it's not open, but because the opportunities are just not there. Things are working. You see, an entrepreneur, you need gaps. You need things that are not working that you can go and make to work so that you can be paid for it. So when everybody has covered all the angles, there's very little opportunity for you. So that's where the UK is a challenge. In America, America is so big that there are always going to be gaps. So that's there. However, in spite of all of that, there are more gaps in Nigeria, even though there are more problems in meeting those or fully filling those gaps. So, but a bigger issue is the cultural environment. Living abroad is not very conducive for me on a spiritual perspective. It's a challenge. It's a challenge. People underestimate what a place like America, for example, does to your family life and your children. Your children will grow up believing that being gay is okay. Yeah, because they have many friends and they have people whose parents are gay.
Yes.
So they will see it as there's no big deal. You and I here in this environment, like, this is a big issue. There is not. You're transgender, transvestites, all those whatever. In some schools now, say they have the toilets and whatever, just any male, female, whatever. So some people, in fact, somebody was joking that in Atlanta now, if you see a woman, you have to first ask her how long has she been a woman, because she might have just become a woman 10 years ago. 10 years, 11 years ago, she might have been a man. That changed.
That's true.
So all those things are a big issue for me. That I'm not sure the extra money you make is worth. At least because I have opportunities here. For some people, it looks as if they don't even have any opportunities here. So, but for me, no.
I think that's a good one. I think we should bring it up to a wrap at this point in time. So I don't know, maybe there are any final words you might like to share that we have not have covered on and have asked and they'd like to cover up.
No, yeah, like I said to the young generation, invest in yourself. Invest in learning. Number two, the eagerness to make money and spend corrupts many destinies. Learn. Life is not a sprint, it's a marathon. So trying to do something very quickly, you're assuming that life is a sprint. I have many friends that were successful at 35, and since 45, they've not been able to find their feet. So it's a marathon. The best way to live life is to find a comfortable pace that you can just keep going and just keep getting better every day to the very end. When I look at child stars in movie business, for example, or in music, I'm always saddened by the fact that many of them that were stars when they were 12, 13, 14, 15, 17, when you look at them 35, they're just a complete caricature of themselves. So let's understand that life is a marathon. I'm going to run for a long time. So the speed at which you start is not what is important. It's the speed that you can maintain and sustain over a long period of time. That is more important. And ensuring that you have as little injuries as possible. Because when you are running too fast too, the chances that you fall and have some serious injuries are very high.
But I believe people should run fast. It's when you run fast that you can achieve more faster. Like Elon Musk. Elon Musk likes things fast. Elon Musk said that if you're not breaking things enough, I think he's one that said it. It means you're not moving fast enough.
Even though he's the richest person in the world today, I'm not sure I want his life.
Seriously?
Does it look like a happy man to you?
It seems so.
Oh, really?
Yeah.
Okay. How many wives or how many women has had children for him?
Probably that's how he wants to live his life.
Hold on. I'm asking you. How many?
I think so far I know like 3.
Are you kidding? How many children do you think he has?
I think someone said he has like up to 8 or something like that.
That's not a... Sometimes don't you look at him and it looks as if he's unkempt or he's... I mean, I'm not sure I like that kind of life. And let's also understand something that wealth doesn't make life. No. Life is far more important than wealth. So don't ever try to emulate anybody for wealth. Wealth is far more important than that. I mean, life is far more important than that. Being able to have a joyful, loving environment, relationship, that's far more important. That's far more important.
As the richest man, you are prone to experience those kind of things you're talking about that he's experiencing. So with the kind of money,
some people, a few people on the world's richest basis seem to have had fairly stable relationships. I mean, Zuckerberg is still young, so we don't know how long, but he seems to have a fairly stable marriage. Even though his wife looks like she might be Chinese or something. Who else is on that list?
Ambani.
Ambani is not on the top 10, but Ambani too, sometimes when you look at his, I don't want to say certain things that I'll be misquoted. He's very lavish. Let me also say something about being too lavish. Sometimes being too lavish, you're trying to cover up for certain things. Now, but Indians generally, when they're very rich, they like to show it. They're similar to us in some ways, because they like to show off their wealth. So, but I'm trying to think of who else is on that list. So you have Musk, you have Bezos. Bezos is divorced. Gates is divorced. Who's number 3? Bernard Arnold is an elderly man. His children are with him, but not much has ever been said about his wife. So I'm not sure whether his wife is still with him. Oracle's wife is also divorced. Steve Ballmer, I think his wife is still with him. But you see, for me personally, stable relationships, health, peace of mind, are far more valuable than the dollars you're counting and the billions. Far more.
But do you even think it's even possible for any African in the next 10 or 20 years to be in the top 5?
It'll be a challenge for any African to be a top 10. To be a challenge. And the reason is that the economies of Africa, where we operate, the economy you operate in defines how high you can go. So, if you're operating in the economy now, because of the exchange rate, maybe it's 300 billion, who knows? You can't compete with a man who's operating in a 30 trillion environment.
That's why the world is technology, which means you can serve the whole world anywhere you are.
Yeah, but it's difficult for a Nigerian platform to be serving somebody in Russia.
But it's not difficult for somebody in Russia to serve a Nigerian platform.
Yeah.
Why? Who made that rule?
No. See, it's difficult. See, it's easy for a Nigerian platform to serve Africa. But to go beyond Africa takes a bit more. And not just to go beyond Africa, but to go beyond Africa and compete with established players, it takes even more. I mean, for example, the Nigerian banks, they are all in the UK, some of them are in the US, some are in France, some are in China. That's a good step. But even in the UK where they are, they're not big banks. But they are sizable vis-a-vis Nigeria, which is good. And that's where you start from. And then you keep growing. So it would be nice to see where Nigerian banks are in 20 years. They might have started becoming big players in the UK. Who knows? So, but it's all about taking things step by step. But for an African to be a top 10 in the world, probably not in our generation.
Seriously, that's
Probably
a heavy word to say. You know, many ambitious people dreaming big and doing very massive things. And you said not in our generation, because if you say not in our generation, you're talking about like the next 50, 70, 100 years more. So,
No, not in our generation means for me 30, for you 50. Now, do you know what it takes to be on the top 10 list right now?
serve the global space.
No, it's more than that. Do you even know the wealth that you need to be on the top 10 list right now?
Right now, at least if you have 300 billion, you're on the top 10 list.
So, you need to be at over 120. The richest in Africa today is Abiko. It's just 30 something. For an African to get to even 50 or 70, it's going to take a long. And that 120 is as of today. In the next 15 years, it might take 200 or more to get to the top 10. So that figure is not sticky. It's not static. We got the first $100 billion net worth about 10 years ago. Today now, to get top 10, you must be at 120.
Technology makes things faster today.
I know. I'm just telling you that, you see, okay, so let me say this. Even talking to you now tells me that you have a lot you need to also learn about wealth creation and quantums of wealth. Technology in Africa, wonderful. The opportunity is there, wonderful. But are you likely to create a Microsoft from Nigeria? Exactly. Are you likely to create a Google or Facebook from Nigeria?
Someone can do that. Is it difficult for someone to do?
Of course it is. Of course it is. You see, it's not just being IT savvy. You must have, first of all, the fact that, okay, let's take it another thing. Look at these global IT platforms and brands. Have you noticed that almost all of them are in America? Not even Europe. America, yeah. They see that Americans are the only sharp people. No. The environment creates a platform for those ideas to be birthed, incubated, and deployed. And the resources to support it are in those environments. The government infrastructure and so on to support it are in those environments. So when you're in an environment like this, you don't have access to all of those things. How are you going to compete?
Wow.
China is able to develop certain things for one major reason. 1.4 billion people.
Okay, plus the population.
So even if they develop a phone that is not as good as iPhone, and the government says iPhone that comes in must pay X amount of duty, So iPhone is at least 2 times the price of the China made. The China made will have its own market now. Because there will be some people that cannot afford that other high one, that will buy that China made. And that China made by that market will now begin to continue to improve on their own quality until they get to a point where they can now start competing with iPhone. So there are many things, there are many factors that define how much you can accomplish.
And why it's even true what you're saying, because even if an African is growing into that 50 that you're talking about, those ones they are also growing in numbers. So it's not static, because before Aliko was not 10, 20, 30 years ago. And also 10, 20, 30 years ago, I don't think the richest person is up to even 100 billion.
No, 10 years ago was about when the first person got to 100.
Got to 100. Then you can imagine, and 10 years ago, I think Aliko should be maybe, I don't know if there was a billion in dollars then.
Yeah. You know, Aliko's story is very interesting. The refinery is what has got him to the 30 billion level. Cement, international cement got him to the 10 billion, 15 billion level. Obajana cement is what first made Aliko a billionaire. The manufacturing that he was doing, all those Dangote sugar and so on, that's what made him a centimillionaire. So you can see how his own progressed. If they allow him to do steel, he might be able to get to 60. If they allow him to do steel. This government doesn't seem to be too so.
Oh, that's true. It's a tall order, like you said.
And that steel, if he's going to do steel, it's going to take him at least 10 to 15 years. Because steel is even going to be more complex than the refinery.
So I think majorly, even apart from the fact that it's Africa, like you said, all those things you said, yes, which are fact. But I think also the Western powers, maybe they just see Africa like second class. So maybe anything that's coming up from them, they could be creating tariff or creating blockade to not make it compete with them in that their level, for it to be able to, for somebody to be able to achieve that status within them.
Right now, they're not yet creating those tariffs. But if we begin to develop those products, yes, they will create those tariffs. So that's something that we'll need to consider at that time. But right now, the bigger problem is not those tariffs. The bigger problem is the environment we're in does not allow for you to create a global brand in that manner. Let's put it that way.
I've even seen it live. It's something that you can serve the whole world. It's about technology, serving the whole world.
It's not that straightforward. There's a lot more to it. For example, technology needs resources, it needs infrastructure, it needs all kinds of support. One big thing that people underestimate about America is that if you have a technology company in America, a business plan might be enough to attract millions of dollars. Because they have companies that is what they do. The people that have supported Google, the people that they know how to run those things. You don't have that here. So that first of all gives whoever is there that you are competing with a huge advantage over you.
Yeah.
And those entities, not only are they going to support you with money, they support you with networks, they have access to Google, they have access to all the other platforms that will enhance incorporation of your own product into those platforms. So it's going to be difficult for an African entity. I think we should be more concerned for now on how do we harness Africa as a continent and the $3 trillion economy in Africa. And that's where the Nigerian banks are playing, Dangote Cement has played, the South African banks have played, the MTNs of this world have played. That's where we need to start from. And then from there, we can now begin to go to the rest of the world. For example, MTN did very well. At some point, I know they were in Pakistan. I think they were in Iran or Iraq. It was in the Middle East. So I don't know whether it continued along that line. So they were really becoming an emerging markets telecoms company, not just an African telecoms company. So for me, if I were to do some form of phase rollout, I'll say if you're in Nigeria, start in Nigeria. After Nigeria, you go to West Africa. After West Africa, you go to the rest of Africa. After the rest of Africa, you go to the emerging markets. So you go to the Middle East. You go to part of Asia. And then from there, when you become sizable through acquisition or some other way, then you can enter into the Western world as a big boy.
Okay.
That should be the path. Yes.
But as a country, is it possible for any country, or do you see any promising country in Africa that could get to global power within the next 10, 20, 30 years?
What do you mean by global power?
Like when it comes to world powers, now you mentioned America, you mentioned China, you mentioned
so
Russia.
let's rewind. For it to be a global power, there are two main issues: size of economy and size of military.
Okay, military and economy.
Military is huge. Russia is not a big economy, but Russia is a global power because of their military.
Okay.
However, Russia is going to continue to experience a decline because their military and their economic power does not match their military strength. The US government spends almost the entire Russian budget on military every year. How do you want to compete? So the next power now is going to be China, because China can also match economically. So they're building their military. So they're going to be the next. So for an African nation to become a top 10 in the next how many years?
20, 30 years.
Highly unlikely.
These are tall orders you're saying.
You see, top 10 is a challenge. For example, Nigerian economy was number 20 something. Can't remember what it was. I don't know what it is now. And we could easily become a top 20. The current environment has set us back a bit. So, but in Africa, for anybody to be a top 10 economically, the only country that probably can achieve it is Nigeria. And I don't see us achieving it in the next 20 years. 10 years ago, I would have said yes, it was possible. But the last 10 years, we've basically declined. And the problem with declining is that when everybody is still going up and you are going down, you can see the gap keeps widening. So if we had continued at the pace we were before, by now we should be a $700-800 billion economy.
Wow.
So that's on economy. And military, forget it. So our best bet to be a global power from Africa is to first be an economic power, then you now become military power. That's what China, for example, is doing. So economic power first, military power second.
Why do you say military? Forget it.
Because military requires both economic power and technology.
Okay. And we don't have that technological advancement yet.
So you have to first have the economic power before you can now start investing in buying and building the technology that you need. So I don't see it happening in the next 20 years.
Wow. These are total words. For individual, no. For countries, no. Means we still have a long way to go. I think that brings it a wrap on this episode. Thank you so much, sir. Thank you so much. Is there anything that you would like to tell us on?
Like I was saying the last time, invest in yourself, learn, be specific as to what you want to accomplish in life. I think part of the challenge for many people is we've not spent enough time to define what you really want to do with your life. Don't let the winds blow you. Don't let peer pressure blow you. Be specific. Know who you are. Know what you are capable of. Know what is right for you. And then invest in that person. And learn and keep learning. Because the world is always changing.
That's true. On that note, we'll wrap it up. Thank you so much, sir.
Thank you very
so
much.
Thank you so much. I really appreciate
Thank
it.
you very much.
So, guys, thank my very powerful guests, as always, for this very powerful episode on financial intelligence. And we covered a whole lot. So, I believe you have been highly impacted. So, the way you could show that you really value this is to like this video, share to people, and subscribe to the channel. Subscribe. That is how we show that we appreciate what we do here. I remember Zik, and I'm going to see you next time. Cheers.